Welcome to Trade Live with IG. It's Thursday, the 22nd of May. How are we doing, people?
Good morning to y'all. Good, very good. It's a beautiful day out there today.
Beautiful day. And we've had a lovely hectic start in here. I realised I didn't have my microphone on about 42 seconds ago. And
I got here in plenty of time actually this morning. I was here plenty of time, sat down, got my computer, got my glass of water. We're all set.
Where's your cup of tea?
Yeah, thanks for the cup of tea. Got yourself one though, I see.
I did.
And you got yourself a fan, I can see.
Oh, it's great. It's been so warm in here. Unfortunately, we don't control the air conditioning.
There isn't any, is there?
No, there's no air conditioning.
There's no air conditioning. It exists in a green box.
But the building controller controls the aircon, so it is hot in here because, of course, we've got lights, hence the wonderful reflection of Luke's eyes there.
There you go. Skin's looking not too bad today. Did you know, though, so I've done some deep research into this many, many years ago, that we basically pull in air from outside, right? The converter's not very good. So in the winter, it's so cold, and in the summer, it is so hot. They get it wrong all the time. So, if there's anyone out there that knows how air conditioning works, send them our way,
Right, what's coming up on today's show? Right, at 7:35 this morning, we have the Tottenham Hotspur Trophy Award. Oh, no, sorry, no, we don't have that.
Hey, you're not getting any laughs out of me for that one.
Yeah. Oh, we've got Arsenal fan there, Arsenal fan in the production box. They're everywhere. They're not happy this morning. We've got 8:35, Angeline and Dylan Rattigan for investing experiences. We've got Scott Sheridan, part 2 of that message coming up yesterday. So, the Scott Sheridan is basically Tom Sosnoff's co-pilot. They built Thinkorswim together. They then sold Thinkorswim. Done well from it, let's say.
Fairly well out of it. Yeah.
And then went on to build the new improved version, tastytrade, which of course we came along and
took off our hands. And they did fairly well the second time round.
So Scott, very happy man, and that's a really interesting interview there. So that's catch the second part. Then we've got Jolie talking about people from tastytrade. Jolie has just landed in the country less than 3 weeks ago. She is trained on all things tasty, having worked on their trading team across there in Chicago.
Very cool. Very cool.
Right, lots to go through. But did you watch the game last night, Luke Moore?
I did not watch the game last night. And actually, I mean, I'm gonna be controversial here. Apparently, it was a pretty poor game.
Oh, of course it was.
That's what they said. That's what I said. I was scrolling through Twitter. They said it wasn't a very good game. Two teams didn't want to score.
So let's hear. Are there any Spurs fans in the hoods? Yeah, there we go. We got Donny already cheering this morning in the face of producer Phil and Luke.
We're surrounded by them at work, to be fair. So we've got Elliot's a Spurs fan, runs the options desk.
Yeah.
There are a few. There's also a few Arsenal fans. I don't know about many United fans, actually. Which is odd, considering most United fans live in London.
Right.
Let's see.
Good stuff. Let's get into it then. Let's get into some overnight action.
Oh, did we just get music then?
He's still getting moody in my ear. He's still saying.
Yeah, I know. I mean, to be fair, we had our time to shine a couple of weeks ago, Arsenal. You know, missed a shot at the semis, the champions.
Well, what is shining this morning, Mr. Luke Moore, is Bitcoin. Yes, it is up and away, $111,000. What do you think?
It is a momentum risk-on anti-establishment behemoth, really. It's just continuing to suck up liquidity and act as an alternative that's uncorrelated to the stock market, or uncorrelated at least to the US. And I think that's
really showed that last night, didn't it?
Yeah, it's long been discussed as an alternative like that. I think it's gone from being, speculative asset through to becoming more mainstream, and now feels like a legitimate asset class that people are allocating towards. The infrastructure around the whole ecosystem has massively improved within the last 18 months. And now look at it. Is it going to break back below 100? I mean, that's going to be what everyone's going to want to watch. But you cannot mess with an uptrend that's put on 45% in the last 6 weeks.
And when there is a bill going through Parliament, one big, beautiful bill.
One big, beautiful bill, yeah.
Adds $3 trillion to the debt pile and the deficit over the next 10 years, then that gives plenty of juice behind both Bitcoin and gold.
Can I give you an infographic?
Oh, please.
Ooh. Boom.
Oh, look at this. Beautiful color-coded as well.
One big, beautiful infographic. So the FT ran an article yesterday explaining kind of the ins and outs of what this bill looks like. And of course, the dollar weakness, a lot of the stock market weakness in the last couple of days has been about treasury yields. In a bit of a reaction to this. So the bottom left quadrant there, the debt impact, which is what I think everybody's getting concerned about. Is this the US's Liz Truss moment, which is what people are saying.
Absolutely.
They're going to add 3.3 trillion to US debt over the next 10 years, which is what you mentioned, which pushes the US debt to GDP ratio from 98% to 125%, which is the biggest since World War II.
Yeah, and that's just on this alone, right?
That's just on this
Not
alone, yeah.
on everything else that is going on, which actually takes it to more like 145.
So he's claiming, so the bottom right there, is it's going to reduce the deficit long term from 6.4 to 3%. And how are they going to do that? Well, the borrowing they're going to do now gives 5.2% real economic growth over those 10 years. But is this a Liz Truss moment where the bond market says, I see the plan, there's no chance you're going to do that because you can't afford it? And that's what they're saying now, which is, the tricky part. The critiques, as you said, the growth isn't going to offset the debt increase, and it's going to downgrade the US credit rating even further. So no one's going to buy the bonds anyway. No one's going to be able to lend you the cash.
Well, they will, but at a rate that you really don't want to be lending to people at. So
correct. You've already got 20% of GDP is being spent on interest payments, and your 30 years are now above 5%. So what do? You're in a straitjacket.
You start being disciplined, which is what they had to do 15 years ago. And Janet Yellen is to blame for all of this. Keeping the spending going, keeping QE going all through 16, 17, 18, 19. Absolutely ridiculous. Let's have a look at the 20-year bond auction yesterday. It was last seen at 4.8 and yesterday 5.104. That is horrific.
Can you explain that to... I'm not great with bonds, I'll be honest. I'm trying to figure it out, how all of this works. I'm pretty confident that I know, the stock market and currencies, and I hope that I speak on behalf of a lot of clients, that the bond market is a little bit more esoteric.
Yeah.
So when you say a 20-year bond auction, previously 4.8, 5.1, can you just explain what that means?
So they were trying to sell $16 billion of bonds.
And this happens in an auction, so they're not lifting it off the market.
No.
This is an auction they're going straight from.
People have to put their bids in.
Yeah.
And anything that's left, right, goes to a primary dealer. So the primary dealer is basically mops it up, right?
So and that'll be like a Cantor's, a private company, or is that going to go back into a government?
All assigned primary dealers, yeah.
Right.
Yeah. So normally there's about 15% of the issue is left for the primary dealer. Yesterday it was over 17, which is a significant number.
Which means there wasn't... So the government have come to the auction and said, hey, we need to raise 60 billion. This is what
16,
we're offering.
Yep.
16, sorry, 1.6. This is what we need. And basically there was no bids, is that what you're saying? Or there was 2% less bids.
Yeah, but also a much higher yield.
Well, this is it, right? So therefore, if there's...
So it's a double bad.
Well, that's why it's an auction, I suspect. So if you're not finding the buyers, you have to decrease the price, therefore increasing the yield to attract those buyers to come in. Yeah. Hence the 5.1 versus 4.8.
As Poppy says there, bond yields must rise as competition for capital. So we and this is why I brought Reza on yesterday, right? So anybody who missed Reza's interview, I tried to get it up there on YouTube yesterday. Unfortunately, we didn't have time for editing. But that will go up today. And Reza went through all of this. If you had watched yesterday's show, you knew we highlighted there was a bond auction at 6 p.m. yesterday. and you would have been prepared for what was a real sell-off in the
stock market from about 6 o'clock, wasn't it?
Well, dead on when those results came out at 6. So you can see there they are. 6 o'clock that came out, and we were trading at 5,930, and we got down as low as 5,840, closing at, I think on 40 we closed.
I wish I'd watched your show yesterday. I got stopped out.
Just
really? Boom, straight stop.
It was out of nowhere, right?
Yeah, yeah.
So that is, of course, the headline across the FT. Well, they've
moved it on a bit.
This is horrific. What happened?
There you go. It's the chap in the jacket that looks like Elliot. You see him right there?
Oh my goodness, Elliot Harris has got his picture. Or Elliot Harris's dad, maybe.
Sorry, this morning I thought the little thumbnail. I was like, "Is that Elliot?"
Yeah.
And then zoomed in, and it's definitely not. No.
So that's your snapshot of why we are where we are. Really tricky bond auction, and this is everything we've been speaking about, the ill discipline, the chance of the bond vigilantes coming. Well, yesterday is just a snapshot of how quick that market can move when they start to get a sniff of weakness.
And it's not just Bitcoin as well. I mean, gold is moving back towards those highs.
Yeah.
If you take a quick look at gold, it was coming down at the start of the month, basing around the 32.30 level, and it's now back up 33.30. Oh, we're looking at my charts here. Excuse me while I tidy this up.
Nice of them to give you a warning.
Yeah, thanks for that one. And I'm going to customize it so that we can see what we are, the watermark. And this is the daily chart at the top here, Ed, but this is we've got the 1 minute chart at the top, the daily down the bottom, and it's this move here that you can see, having based around the 32.30 level, and we've now seen 3 green days as we march up, and you can see that impact at 6 o'clock yesterday afternoon. We kind of start to break out and start to move higher. So yeah, gold is going to be one to watch for sure.
So gold and Bitcoin doing their thing. Now, if only there was a way to amplify your returns on Bitcoin in a stock that you could put in your ISA. Oh, that's right. We interviewed the CEO but 47 hours ago. So that's not the greatest chart because it is a little bit liquid issues. But you can see when the interview came out, 9:30, a couple of days ago, it was trading at 32 pence. It's now trading at 41, people. That is a 30% uplift.
Is this your new Vodafone?
The Smarter Web company yesterday.
Is this your new Vodafone?
No.
We talk about it.
Nothing replaces Vodafone.
Let's pat ourselves on the back.
30% move in 47 hours.
Yeah, it's not
right,
bad.
isn't it?
I mean, I'm kicking myself because I haven't got any of these, and I'm hoping that they pull back a little bit. But it is an interesting story. Nonetheless.
Well, I think it's really interesting because if you get your head around what I was doing with the Lego boxes and the building blocks, then you know that the objective as the company is to continually do capital raisings. So that kind of holds you back a little bit from paying at 41, because the math doesn't really work at 41, and there has to be a capital raise, which means the stock might come off because there's more shares to go around. So 35, 36 makes more kind of sense. Maturin got some. He's got some in his SIP. That's great to hear. Well done, sir. Muy bien. And Julian, no, it should be on the platform, but it's absolutely not on leverage. Do not trade this thing on leverage anywhere.
Yeah, you got to get a quote as well. So you got to deal it share dealing, get quote. You can't leave bids and offers. So you just got to put a quote in.
You can lift the offer though.
You sure? I think you can just quote it.
On because it's on Aquis?
Yeah. So you can deal it.
I certainly don't do quotes.
You sure? So you just leave bids?
No, just trade buy and sell.
Okay, interesting. Yeah. I thought it was just quotes anyway.
No, it's different from Aquis is live trading.
No, I know, but it's quote driven on the share side. So you'd have to request a quote in order to trade.
On IG?
Yeah.
Right.
Yeah.
Other places wouldn't be that though. Well, I know what other places definitely aren't.
Yeah, interesting. Okay. Interesting. What else have we got going on? Do you see OpenAI's acquisition?
Yes.
So Johnny Ive, and this one's going to be, if I just pull up the FT article because it is their top story on the day. There's a rethink going on, and this is a very, if you bring up my my screen here, I think this is quite a romantic picture that they've put up.
Wow.
Which is a bit of a strange one, isn't it? I wonder whether they've actually used AI to generate this.
Yeah.
But for those that don't know, Johnny Ive, or Joni Ive, I believe is British, first and foremost. But he was the chief designer for Apple, the chief designer for Apple, working through, for them. I think he was with them for 20 years or so. So he launched the MacBook, he launched the iPad, he launched the Apple Watch. It was all very much his design. Left a couple of years ago to set up his own thing. And he's taken it upon himself. I mean, he's been doing some property work. He's basically a designer, but he's taken it upon himself to try and design the next iteration of devices primed for AI. Whether that's a watch, whether it's a pin, whether it's a bracelet or whatever it looks like, he's the one trying to trailblaze to create these new devices.
Step up OpenAI. They fancy the sound of that, don't they?
And they have $6.4 billion they spent to try and buy this company, and they have bought the company. I think they've got 47 staff, 55 employees, it says here. They already own a 33% stake, so they've just topped up to full ownership. Ives is not an employee of OpenAI, though. He's going to act as a consultant, so he gets to carry on doing all these other projects that you have to do. But that's interesting. I mean, what would it take you to not have a phone anymore? If you think kind of big brain stuff?
What,
right?
a chip?
Some kind of, we're not maybe thinking kind of Neuralink, Tesla stuff, but, if you had contact lenses, perhaps, or you had, if your earbuds could do everything you needed them to do.
But it's happening, right? So the Google sunglasses that Terence has got,
and the Ray-Ban Meta cameras. Yeah, but they've still got quite obvious cameras. I mean, I imagine someone that's, a chief.
No, I mean that you can take a phone call in your ear from the sunglasses.
Yeah, for sure. But I imagine like all these things are going to get smaller and smaller and smaller, and battery power is going to get better and better. It's just going to be really interesting. Maybe it's a cap, or maybe it's a beret if you want to be Sosnoff. You get the little.
Yeah.
Maybe they put something in the thread in your clothes. I don't know. It's interesting. But 6.4 billion is a big acquisition. For a company that's never had any hardware to then step up and create hardware. It's one thing designing hardware, it's another thing pushing it into production, which is going to be their pinching point, having never done it before. Yeah, it's interesting.
But because, of course, for Google, Android works really well, right? That gives them a lot of optionality. Obviously, Apple. But if Microsoft and OpenAI are looking at launching their own devices, then that tells you why Apple was such a negative, down 2.4% Apple straight away there as that announcement came out, which actually tied in with the
market set off. So this was updated yesterday at 6:41, this article. So
the news came out about the same time of the acquisition as the bond auction.
Interesting.
So it got boom,
double smacked.
Yeah.
We need to talk about UK stocks. There's a lot out.
There is, yeah. What do you want to start with?
Let's start with BT. BT, in my eyes, are the biggest one here. Let me just get them up on my
apple of your eye
screen. Are they the apple of my eye? British Telecom. I mean, it's not sexy enough for me. It's a core company for the UK. So they have come out. Pre-tax profit was a miss. 1.3 billion plays 1.8 billion on what the market was looking for. I think the market was specifically looking at their OpenReach infrastructure. So they've come out and the OpenReach.
Maybe the guys will find out on the screen at some point.
Yeah, can you check that on the screen? There we go. Core earnings of £8.2 billion, which was up 1% on the previous year. The OpenReach was the only part of the business that grew. And yeah, seems okay. Do we have any early calls on this? Let me have a quick look on that. We've got our good friends at Singers are calling them down 1% at the moment. And they're looking at that EBITDA miss and the ever so slight miss on the top line revenue, regardless of the growth in OpenReach. So that is interesting. Where else can we look?
Well, let's go. So EasyJet. So EasyJet H1 results out. And we've got 3.5 billion sterling of revenue. Now, remember, it's a bit of a funky quarter, right? Because, of course, H1, specifically Q2, is always unprofitable for an airline because it's January to March. So January to March, you are doing all your refurbishment work on the aeroplanes. You're doing your big marketing push to get summer bookings. So the loss from that 3.5 billion is about 400 million sterling. But they've got good foresight on bookings into summer. They've got about 80% booked for Q3, 42% booked for Q4. They've still got a constrained supply because they're getting delays from Boeing, they're getting delays from Airbus. But, yeah, so that's the Squeezy Jet.
Squeezy Jet. Johnson Matthey, JMAT, is going to be an interesting one.
Right.
They have, at long last, it's been expected for a little while, but they have sold off their catalyst tech business to Honeywell. So they've long been looking at doing this. It's a transaction that they're going to complete for 1.8 billion sterling. Which is interesting because the market cap of the company is 2.6 billion.
Yeah.
It's a massive deal for them. They're getting called up 10% early by our good friends Singers. So keep an eye on those guys. This morning they're a big weighting in the FTSE. So it's a big deal for them. The deal represents a transaction multiple of 13.3 times EBITDA, which was significantly higher than the group trading multiple of 5.7, hence the uplift. They've also separately announced all their other figures that look roughly in line, pretty much. So they're saying that the deal's going to expect to close by H1 2026. So let's keep an eye on those guys on the
Yeah, God, that could. So what are they left with?
Do you know? I'm going to be honest. I couldn't tell you what Johnson Matthey do. What do they do?
So we always used to trade Johnson Matthey as a proxy for platinum.
It's a chemical stock, supposedly.
Yeah.
Chemicals and Sustainable Technologies, headquartered in England, and Honeywell are.
But there's, yeah, so that catalyst.
Honeywell is a multinational conglomerate.
Oh, well, yeah, Honeywell, we know Honeywell. That's a big industrial. My
industrial company.
bestie had his first job there. And that was when I was first introduced to stock compensation because kept on telling me, I was at university and he kept on telling me, I'm getting stock. And this, Honeywell did very well in those days.
Very good. But is something sweet?
Sorry?
Would you like something sweet?
Yes.
Tate and Lyle.
Yeah.
Very okay. They beat on their profit before tax. Their full year revenues were 1.7, which is in line with their expectation. They're expected to deliver revenue growth at or slightly below the bottom of their medium-term range. And have we got an early call on Tate and Lyle?
Right. Monkey Man's just sent me an email on Palantir secures a near 800 million US Army contract. Modification. Thank you for that, Monkey Man. Hadn't seen that one, so let's see how that one does as it comes out. Parky 1977 saying Lloyds are still flying.
Yeah, I mean they've done
They'll
well
get hit today, unfortunately, but
they've done well to hold this 78 figure. I mean 74 was the breakout.
Yeah.
And they've done really well to hold above it. So fair play, fair play to Lloyds. They've caught themselves an upgrade today.
Really?
Caught themselves an upgrade at Redburn. Price target of £1. British pound. So they're going to get called up a little bit today. We also need to take a look. Oil's been in the market recently. Well, I mean, oil's always in the market. But
any other upgrades, first of all? You see?
Do we have any other upgrades? One second.
Well, I'll tell you what, we'll take a look at that after the break. What we do want to upgrade is our subscriber count. So if you are watching there, give us a thumbs up. And if you're not subscribed, give us a subscription. We will see you in a short 2 minutes when we've got the opening bell.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome back to the opening bell on this lovely sunny Thursday morning. We just spent 2 minutes arguing about words. What we need to do is go through some upgrades and downgrades though. And Marks and Spencer's have caught themselves an upgrade. At Jefferies, they've been raised to £4.40 off the back of their numbers yesterday. It looks like Jefferies have been pretty busy though, because they've also cut Sainsbury's to a £3 price target. What else have we got here? A small cap has been Central Asian Metals have been raised to a buy at Berenberg with a £2.30, and Santander, Banco Santander in Spain, have been raised to a neutral at a company called Autonomous.
Right, so we've got quite a few things to watch this morning. Any US results to look at? Snowflake, didn't we? Didn't check them. I was in bed early last night, but it looks like a positive result. So Snowflake up 5%. Let's see if that was after hours. Yeah, there we go. So 9 o'clock, it jumped from 180 to 192. So fair play, peers, if you're watching. That was a good shout the other day. Nice little 5% rally there. I thought the expected move would be more than that. So I'll have to check that.
Not sure what the expected was. Yeah, but they said they've had some new products launched that have gone well. There was also an acquisition from AT&T last night, Lumen Tech.
Oh yeah,
LUMN. So they are agreeing to buy its consumers fibre optics business for $5.7 billion. But in the UK, which we haven't spoken about, Tullow Oil, which is a big retail client favourite stock.
Right, Jesus, that old chestnut.
That thing will probably move. They've got some group production figures. It's within their expected range, and they're going to see full year free cash flow at 400 million, assuming a $65 per barrel of oil inclusive of any disposal proceeds. So we're going to watch them on the open as well.
Awesome. Julian, sounds like you had problems there. It depends. Maybe you're too big, sir. Too big for the market. So there's the amount on the offer and bid can be as small as 4,000 shares sometimes. So I had that problem as well. But away from the numbers, managed to get it into his SIP. So yeah, just try and reduce your size and see if there's something there. Mm-hmm. So, right, we've got about 45 seconds to go. We're going to be watching EasyJet. We're going to be watching the reaction of stocks to that US market drop last night. Let's have a quick look at the futures before we open.
Yeah, don't forget, we've got BT to watch. We've got this Johnson Matthey disposal to keep an eye on.
Well, that won't uncross for a while, will it?
Let's have a look at that one. We haven't spoken about British Land have had numbers, Investec have had numbers, Kinetic, Shaftesbury, and of course we've looked at Tate & Lyle already. So there's some bits and pieces going on. Plenty to be keeping your eyes on this morning.
And we've got 111 people live on YouTube at the moment. We've got Bitcoin near 111,000. All those lucky numbers. It's going to be a good day.
Yeah, if you haven't, like and subscribe, please, because it makes us look better.
If you're a Spurs fan, like...
Oh, I've missed the bell. I've missed the bell. Sorry,
Sorry,
guys.
how does the bell ring if you don't have the bell in your hand? I don't understand.
The magic of show business. The magic of show business. What is moving? What is going on out there?
All right, let's have a look at the down moves first of all. So Carnival down 1.9%. N10, wouldn't bet on that one today, down 1.2. ABF down 60 basis points. Barclays, Rios, Diageo, all small down on the day. BP down 1.8. Was that the move in oil?
Down 1.2 there, I can see it. Marks & Spencer's having a day two move on their numbers yesterday after that upgrade. 2.3%. There you go.
Right, let's get the rest of these stocks open. Yeah, definitely not much on the upside. JD Sports having a bit of recovery. Andrew McKelvey, let us know what you did with your stock. You got at 81 yesterday.
Oh, Johnson Matthey, not open yet, but indicated to open 25% higher.
What? Oh my goodness. Right, we'll have a look at that one in 4 minutes as it's about to open. GSK flat, pretty boring. The Sainsbury's down 80 basis points on the downgrade. EasyJet down 5. There it is.
Down 5.
Market doesn't like that 400 million sterling loss or the commentary about bookings that have gone alongside it.
BT Group down 1.6%, trading 166 on the back of those numbers being a little bit lower than expected at the very top line. So that's going to be one to continue to keep an eye on. What else have we got out there that's quite interesting? I'm going to have a quick look at the FTSE 250.
Yeah, you have a look at that. I'll go on to Europa and let's just see across there what's happening. Porsche down 5%. Wow. Puma also bad. Almost bought a pair of Nikes yesterday. I was close. Not Nikes, Adidas.
What were you looking at?
I actually have never bought a pair of Campus or Spezials. So I was close, but no, stepped away.
I do think that they've kind of they've obviously found their groove with what worked when they sold out of the Sambas. I think all their models are slightly converging. And I do think you buy one, you buy them all. I don't think you need multiple pairs. That's just me.
No, I completely agree. And I can see why people, almost like collector's items, buy different colours and different. But I think Adidas need to come out with something new for it to kick on again.
A pair of these, bud. Onitsuka Tigers.
Oh, yeah, the classics. I had them at university.
Yeah, exactly, yeah. They've got a big store now on the corner of Regent Street. They're coming. They're coming for you, Sambas.
Right, we've who else? Who's the winner in Europe? I don't think there's going to be many, is there? No, there it is. Bayer up 1.5%. Anything in the FTSE 250, Mr. Moore?
Yeah, Kinetic. So Kinetic had some numbers this morning. They are leading the charge, up 5.5%. Let me just get you their details on the numbers.
Screen off, gents.
So their full year revenues of 1.9 met estimates. Their adjusted operating profit was down 14% year on year, which is not particularly pleasant. Tough near-term trading conditions impacted the performance in UK intelligence and US sectors in Q4, but the market loves it. So I need to do some more homework on that one to see what's going on. Elsewhere, we've got Doc Martens up 5%.
Really?
Yeah.
They're still alive, are they?
They're still alive. Do you know?
You got a pair of Docs?
No. Do you know? I reckon Little Luke's got a pair of Docs. He strikes me as the kind of guy.
Just for the weekends?
Yeah, Phil. Was that producer Phil? You've got a pair of Docs. Oh, yeah, what do you mean? Of course, yeah.
Yes, he is. He goes to all the grunge rock bands.
I haven't seen a pair of Doc Martens out on the street in a long time.
I've got a pair.
Have you? Well, for walking or for fashion?
I went through a stage of going to MTV Awards and stuff like that where I felt I had to dress cool.
Doc Martens, I'm not getting these confused. They're those big chunky boots that rappers wore in the 90s with big baggy jeans, right?
Oh, no, you're a bit out of date there. They're very
out of date, but that's what in my head. That's what I'm going towards.
So student stroke. A few years past student kind of years. Very popular for women.
There you go. Yeah,
want to look cool and grungy.
Producer Phil says he's still in his student years, so there you go.
Yeah.
If anybody wears Doc Martens, let us know in the chat because clearly between Sambas, Spezials, and Tigers, we clearly haven't got a clue what to wear on our feet. So why should we critique at all?
Whitbread down 2.3. Some weakness actually coming out in this FTSE BT group down 3. So not a good day for companies reporting numbers. British Land down 4.6. IAG falling 1% on the back of EasyJet numbers as well.
If you want to take a little look into the FTSE 250, the bottom, Bloomsbury Publishing, down 10% on numbers this morning. So they came out, they said trading for the 25-26, Bloomsbury Publishing, they've gone straight into an auction. In that case, are they even out of an auction? Let's have a look. But yeah, they're trading for 25-26, expected to be in line with current consensus. 5% increase in dividend. They're expanding into Asia, and their books remain exempt from US tariffs, which doesn't seem down 10% at all to me. So let's see what's going on there.
Right, Johnson Matthey then. We are off and running. £17.30, which to be fair only takes it back to where it was trading last June. But that is up 27% on the day. Well done to anybody who's got Johnson Matthey.
Don't see there's too many of those around in London, do you?
No.
But it's another case.
Well, unless you're in Smarter Web Company.
Well, this is another.
It's just a normal day.
And it's just a normal day. It's just another case, though, of UK assets being lifted by non-US buyers.
Yeah.
Sorry, by non-UK buyers.
Or the stock being so cheap that there is something you can do, sell part of it, and that's hugely value accretive.
But so we looked at the numbers there. So it was on their books marked at a 5.5 multiplier. 1 second, 5.7. So the group, Johnson Matthey Group, JMAT had a group trading multiplier. I can't talk today. Group trading multiplier of 5.7 times, and this deal was dealt at 13.3 times. So it was on a previous market cap of 2.6. The deal was worth 1.6. That was a 13 multiplier, so just call it 2.5. So that was 1.6, 2.5, call it
hugely accretive.
800 million, and they've sold it for 1.6. Hence, you're getting a 30% uplift.
Yeah.
Nice. Maths. If only we did that before.
Yesterday.
Yeah, if only we did that yesterday, yeah.
Boise asking, look, how come you don't dress cool for IG? He's obviously speaking to you, not me.
How come I don't dress cool for IG? Define cool, Boise. I'm doing my best. I can't get my legs up.
Boise's going to be in the studio soon.
Oh, is he coming in?
Yeah.
Very good. I've got some client meetings today, Boise, so I thought I'd put a shirt on.
I think he was referring to me.
Because, what, we're twinning?
Well, no, more because... Well, actually, I am... I am. It's about time to go out for some... go back to Reese for some...
I'm actually on the hunt at the moment for some Oxford shirts. So some nice kind of button-down shirts and some polo shirts.
Nice.
I've never been into polo shirts. So if anybody knows where I need to go, is Reese the place?
It's Ralph Lauren, isn't it?
Yeah, I'd be to get the big logo. Not a big logo guy. I've got a couple of.
So you want a plain one like this?
Yeah.
Zara.
Yeah, but I also want to be able to wash it and wear it twice. So I'm not going to go to Zara or H&M. But let me know if there's anywhere to go. Thomas Pink shirts, Monkey Man, yeah. Interestingly, they are, I'm pretty sure they went from having shops to being online only. And the only reason I know that is we used to have a CEO of our South African business. And I went down there on a bit of a secondment to go do some training.
Sorry, look, we're just getting a headline across. OPEC Plus are discussing making another supersized output hike in July.
Output hike?
Another output hike in July from OPEC. That is being discussed.
And oil's down 1.8% in a very swift move.
Right, so that is why we're seeing that move in oil. So this is,
see it, here it comes.
It's just continued supply problems. Then, of course, the worries on the demand side as well. If we get this pullback in growth.
But tell me, does this play into Trump's hands? We're just trying to find out where you would catch this at support. So you've got to go back to, it's a week ago we were here at $60, pretty much.
Yeah, where's the support?
So that would be 60.10 on US crude. But if we go back a little bit further, you can see we've kind of chopped around this level before, but you're resting. If I come back on a daily, where is the 50-day? Yeah, we're way below all of the clear moving averages. So you've got this wick low here, which is the one we just saw at 60.10. 55. So you could argue, when did they make the previous hike announcements?
Was it 6 weeks ago?
Yeah. So is that this at the start of April here? So we saw a move 71 down to 55. So that was a $15 price move.
Yeah.
Do you see an opportunity?
Well, I'll tell you whose hands it is playing into is Jerome Powell. You know, absolutely beautiful, because your inflation problem disappears.
Yeah. Well, but this also plays into Trump's hands, doesn't it? Because he wants lower energy prices, because he knows a big proponent of everybody's spending is energy. Plus the next layer of national security, plus everything that comes with it, nuclear and blah, 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 blah. But lower prices seemingly welcomed by OPEC as well.
If they had any money left in the coffers of the US Treasury, they could buy some of their oil strategic reserve back. Yeah. But they don't have any money to buy it, because that would add to the deficit. How big a problem have you got when they cannot come to buy back the strategic reserve that they sold only a year and a half ago, using all that money to bring their budget deficit down? Absolutely shocking.
What's the upside case here? The demand side of the story. We're not going to be off fossil fuels anytime soon, as much as Miliband would want us to.
Yeah.
That's not going away. The liquid natural gas story still exists as an alternative, and in fact the US have now become exporters of liquid natural gas, which is good. But it just feels like there will be a natural bid for crude.
Yeah. Well, it has to be, because you get to the point where the taps get turned off. Yeah. In the US.
What's the break-even price for US shale producers these days? Do you know?
I mean, it must be around here.
It's got to be around here, right?
Yeah.
So is this OPEC trying to screw US shale again? That's what they tried to do 2 or 3 years ago. They just said, right, we're going to flood the market with our oil, destroy US shale, and you saw the Baker Hughes rig count, everything on land just got destroyed because they could not pull it out of the ground profitably,
right?
Which left them in the hole, which is why they had to drain the strategic reserve in the first place. Now, is it a power play? But it would be weird timing to do this at a time when you've got the UK urging Europe to cut the price cap on Russian oil.
Well,
and Trump's little celebratory tour last week.
Well, that's why I think it's happening.
Well, this so
this has been agreed to last week.
This has been agreed to last week. Pump out, get the price lower.
Yeah. So I think it's more maybe to push Russia into peace.
Push them into peace. Well, yeah, but you're doing it through.
Well, you're killing them.
Well, not if they've got a $60 price cap, which is where it is at the moment. The EU sanctions have got a $60 price cap on Russian oil at the moment anyway. So they're not taking part in any of it above. So it's not really helping. It's not really affecting them, right?
No, but most of the Russian production goes to elsewhere. Goes to Turkey and China. So you're throttling their income until they do a peace deal. Yeah. Yeah. Smart.
Interesting.
Right, BT down 4%.
Yeah, well noted, McKelvey. Away from the numbers, got to be a Fred Perry for a polo shirt.
Yeah, you've got a couple. You've also got.
I can get myself a Vespa and a couple of tattoos.
The stock that's up 1.7% today. Marks and Spencer's maturing very wisely, saying, "Yeah, I've started buying clothes from Marks and Spencer. I can't believe it.
I have started. I mean, we've got the same set of jumpers from them, haven't we?
True.
Yesterday. They're doing a better job. I'll give them their credit. They're doing a better job.
Yeah. Right, a lot more blue on the screen now then. So you see JD Sports recovering up 1.4, SSE up 1.3, £17.80. That has had a cracking few months. Not one that we've looked at for a while, though. Numbers were yesterday. And we see them, let's drag that out too. Really nice recovery from £14.50. Go on the Jockos.
I tell you another one. Mitchell and Butlers are trading up well, 2.3% on numbers this morning.
Right.
So they came out with numbers, and Mitchell and Butlers are cigarettes, right?
Pubs.
Of course they are pubs. Their first half revenue was a beat, 1.45 billion sterling. Profit before tax, 134. They've said their strong trading performance in line with like-for-like sales up 4.3%, and their operating profit to be the top end of market expectations. So we're still going to the pubs. Come on, the Brits. We're still going to the pubs.
Do you know who was in the pub last night? A lot of Spurs fans.
A lot of Spurs fans.
With that, let's go to the break. We're going to have a quick 2.5 minutes, and we're back. Fast Markets. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome to Fast Markets with me, Luke Moore, and Richard McDonald. Fast Markets, go! Fast markets. What are we talking
Right, fast markets. I am going to ask you about You've talked a lot about MercadoLibre.
Yeah, MercadoLibre, my darling of Latin America, on an incredible move, incredible growth story. But they're finally replacing their founder and CEO.
Oh, wow.
He's taken a step upstairs. So he's going to become the chairman of the board, announced late last night. And Marcos, no, hang on a second, the current commerce head, Ariel Svarstein.
Yes.
Svarstein, do we think?
Yeah.
For the role.
Ariel Svarstein.
I like companies that are still founder-led, because you just know that there's an ownership, you know that there's the ability to step into any department and have real kind of care and...
Apart from Lululemon, who was a complete liability.
Oh, really?
Yeah.
But anyway, so they are getting a new CEO, and if you can see from the chart here, I mean, what an incredible...
Oh, what a call, Luke. Well done.
Got. You know, that low of 172, they've chucked on $100. I'm going to keep an eye on those.
You started talking about this in January. So how much has it gone up since January?
January was down here 167.
God,
that's nice. It's a nice story. It's a nice story. For those that don't know, it's the Amazon of Latin America. If you think about what Amazon did to the distribution, I don't know what they call it, the distribution infrastructure around the world. Imagine trying to do that through Latin America, where the rail, the air, the roads are nowhere near the quality that they get in the Western world. MercadoLibre have been setting that up. They've been licensing their service to other providers. They've been doing a lot more in the financial services space, which is really cool. And they've just been an incredible growth story. So yeah, long may it continue, but it's going to be one to see whether the market likes the fact that their founder has stepped upstairs.
Yeah.
So we'll have to keep an eye on that one. So MercadoLibre, fast markets. Look, I still think it's a really interesting story.
Okay, let's move on to reporting numbers tonight. Ralph Lauren, we got the screen up there. It's had a great recovery.
On the subject of t-shirts with logos on.
Well, that's what I was thinking.
Good timing.
It brought us into it perfectly. So, 10th of April, you see them down here at 180, now nearer 280.
280.
Doesn't go quite as well.
Doesn't quite go so
well. We got to get tickets for December. Ali Pali and the darts is the best night of the year for me.
Are you gonna try and get Trade Live with IG on a little whiteboard again?
I forgot about that.
If you can rewind back to whatever date it was, there's you looking proud as punch, because you've got, instead of hello mum or whatever you've got written on the board, you've got Trade Live with IG.
And I managed to get it right in front of one of the players in the camera.
This time it's got to be like and subscribe.
Yeah.
What do we think about
Time will tell. Right, so we are looking at a $26 move tonight. That's big, very big.
Dirty, stinking 10% move.
10% move for Ralph Lauren. That's the June. Let me get the...
that's all expiry. They don't have a... How strange not to have a May expiry.
Yeah, that's interesting. We'll have a look at that. Maybe that will change later. But yeah, for June, we see the expected is about an 8% move. What do you think on this one, Luke?
The only thing that would keep me interested in that expected move is A, the move that it's had, and B, I don't know enough about where their supply chain is.
Yeah.
So did you see the story from Nike overnight? They're going to raise prices as a result, finally. So they've basically broken... They're not going to defend their margins. They're just going to pass it on to the consumer. All these top costs of tariffs, they're going to pass.
But let's remember, it costs about £4 to make a pair of trainers. So your tariff effect ain't much. So you're going to increase prices by £3?
Well, it moved the share price last night 4%. But back onto the case in point, what does it mean for Ralph Lauren? Well, you're seeing companies already, how many different companies have said that they're not going to give guidance and they get killed off the back of it, only to then reinstate guidance at some point in the future and then surprise the upside. I wouldn't be surprised if something like that happens. Really?
Okay, so Tesla, Monkey Man is telling us to check out Tesla and
Microsoft.
Monkey Man, Microsoft, and Saffron asking us in Tesla. What one do you want to take first?
Tesla. Let's have a look at Tesla for Saffron.
Tesla.
Tesla's
Such a cool name, by the way. Saffron. If that's your first name, what a cool name.
Yeah, very cool. Very cool. Saffron Wild. I've actually got them when we were in Dubai. The only thing we had to come away with was a massive pot of saffron.
Right.
And it was like 10 quid. The best thing in the world. Tesla, I had lunch with a client yesterday, and we spent most of lunch discussing the bull and bear case of Tesla. And the client I was with was fairly bearish. I'm fairly bullish.
I don't think you can be bearish.
The point that he was trying to make is that if Elon steps away, I think you lose a lot of that brand Elon, which I think
literally just said he's staying for 5 years. He said it 2 days ago.
I didn't know that.
Yeah.
Did he?
Yeah, he confirmed he would stay for 5 years.
Anyway, okay, but the whole point was around like valuations and the uptake of robotics is going to be not a linear scope. Their big catalyst is only a couple of weeks away, right? The June event. I don't know if we've got a date for the June event, the robo-taxi event.
Oh no, I haven't seen that.
Yeah, so they've long been talking about June being not the make or break, but this is the point at which we are going to come to market with a robo-cab, and we're going to win, and it's going to be launched in Austin. That's what they're targeting. So if they miss that or slip, it's going to be vulnerable, especially because the stock's moved so much recently.
The scary thing for me in the last interview was he expects hundreds of thousands of self-driving vehicles by next year.
Yeah, that's
18 months time, hundreds of thousands. And he said it very matter of fact, and the interviewer picked him up on it. Sorry, by next year. I think it was Dave Faber, CNBC. And he said, yeah, hundreds of thousands, if not more. So they're going big on this.
Yeah, but I mean, they've got licenses in Austin, I believe they've been granted, and somewhere else that I can't remember. Are they going to be able to produce hundreds of thousands of cars? Because they haven't produced anything yet. They've got a couple of remote control cars that they showed at the previous event.
Yeah,
unconfirmed they're remote controlled or not, but the robots certainly were.
But just in case, I don't think you can be bearish on this thing for what Nick Feingold came on and highlighted to you. It's all about the dreams.
Yep.
It's about the data, the robotics, the energy, the AI, manufacturing, and space.
Yeah, and then it kind of comes round and round and round. Yeah, look, I personally like the story. I've got a lot of clients that like the story, but a lot of people hate Elon. I've never seen a more divisive stock.
Yeah,
in terms of just the personality of people that want to be there. Yeah, tricky. Microsoft, what do we think of Microsoft? Well, we've already spoken about the OpenAI deal, of course. Microsoft, the big partners in OpenAI. What do we think technically about Microsoft? When are their numbers out? They've already had their numbers.
Yeah, great numbers.
They came out quite early on in the season.
In fact, that was probably the big one. And this shows you that when numbers come out, then the first move, you can still buy it. Right, when numbers are that good and the stock's been, woeful for so long, you can see there you could have got in at 430, 435, 440. Now trading 450. First thing I did that day was sell a 400 put because I didn't necessarily want to buy them because I'm not bullish on the market, but I knew at 400 I'm good with that set of results. Yeah,
I imagine we're thinking about this level now. I mean, look at that resistance that we've got at whichever number that is, that peak back at the end of last year.
Yeah,
not quite that one. The second one keep coming.
Sorry,
this one here. Yeah, which is basically where we've topped out in recent history. That's going to be a level that you need to break on. Has it got the Lloyds about it, where it can break and just continue to motor on?
Yeah,
that's a pretty decent level to hold. Don't forget, of course, that would have timed in roughly with the all-time high on the S&P, which was early this year, wasn't it? So it didn't make a second high when the S&P made an all-time high.
No. Because there was all those rumors of them closing data centers.
I remember that. Yeah, of course. And then they did the deal to buy 7 Mile Island, of course.
Yeah.
Because they were worried about the power story.
So does it feel like, I think selling Strangle here as kind of 475, 425.
Well, what's the expected move? Where are we on our date? So we are 29 days. 57 is probably the right time to sell. And you've got a 420, 480 Strangle.
Yeah, let's go 425, 480 pays you $12. That's not bad.
Yeah, it's not bad. Not bad. What's your theta? $21 a day? 21 cents a day?
I got 21 cents a day.
Your probability of profit is 2/3. Probably a little too low for the Tasty contingent. They want to be closer to 80%, don't they? So maybe if you come just slightly outside the expected move, what does it cut to?
Yeah, but sometimes you gotta
be a bit funky.
Take a bit more risk. Sail against the wind, is it?
I suppose the question is, has the vol been? What are the next volatile events for Microsoft? What have we got scheduled? We've got. I know that there's obviously not related, but if you've got the Tesla event, that's going to give some vol to the tech space. If you've got the Apple developer conference, which is coming up in the next couple of weeks, that'll add some vol to the space.
IV rank 14, so that's a warning for us.
Yeah, and for those that don't know, when we look at these short options strategies, we're clearly looking to see how much premium we can collect, but do it when the market is on side for you. So when you look at options, you're looking at the implied volatility, i.e. if you're selling something, what is the juice in the volatility? And what Tasty do is they take it one step further, is they then rank the implied volatility against its own historical averages. So 14 as an IV rank would imply that this is in the lower 14th percentile.
Yeah.
And it's basically, there's nothing there to sell, there's no juice.
No, bit of juice. But now, talking about Tasty, how about we get on the most experienced man in Europe for Tasty Trade? A man that I'm about to meet in Milan in about 3 weeks' time. Remember, we've got the big event coming up with Tom Sosnoff, Anthony Battista coming here to London. You can join them on June the 20th, and myself buying the drinks. You sign up on the link we're about to put into the chat. But also, if you're in Milan, come along and meet myself and Soz and Dylan, who's about to join us after this break.
See you later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back to Trading Experiences with myself and Dylan Rattigan, our international man of mystery who joins us from Sardinia, not Milan. Why are you in Sardinia?
Well, I'm just taking a moment to inspect the Mediterranean seas. You know, there's a pirate island out here, Sardinia, you referenced, and you know you got to keep an eye on them. So I try to come over here once in a while and make sure that there's not too much pirating going on. Plus, it was really rainy there was too much rain in Milan this week.
Don't
so
say
I figured,
that. Don't say it, because you know I'm coming over soon. So please don't. I'm hoping for
we're
hot weather and you know poolside weather, that sort of thing.
We're good. We're saving it for next week when you're in town. Right now, I need to water the gardens. We have the parks where there's all the lavender. There's lots of plants, the magnolias. Everybody needs a little rain.
Nice.
But we want to make sure that it's properly watered before you arrive.
And lay out the red carpet for you know,
so that when
Tom,
you arrive, it's
Rich,
just a glorious
I
garden.
was just saying, like, I'm going ahead to lay out the red carpet for Tom, Bat, and Rich when they arrive. You know.
Yeah.
Speaking of
Important.
which, we talked about pirates earlier, which reminds me, this whole week, you know, we're talking about bond vigilantes and, you know, the fact that, you know, are we at this point with that big, beautiful bill? You know, we saw Treasury yields, 10-year, 30, I mean, across the board, jumping, you know, to levels not seen since October 2023. This is the 30-year. You know, any concerns that in terms of like, you know, are we at a point now? No, Rich has been calling a market meltdown since we started the show September last year. But, you know, is this kind of like a bigger problem that's just a ticking time bomb, or is it going to be somehow or another kick down the road?
Yeah, I'm very dismissive of it. In fact, I think it's a good thing insofar as I think it's just another little slap on the wrist for the American policymakers to make some adjustments, which they have plenty of time to make those adjustments. I don't look at the bond auction yesterday beyond that. I mean, I think that it's easy to see where this could spiral. Mm-hmm. But the reason that I don't think that the reason I'm pretty dismissive of that possibility is there's really nowhere else to go. And so that sort of goes back to the 2008, 2009 paradigm where even in the face of egregiously bad American economic policy or malpractice in America economically, in the short and intermediate term, there's just really not an alternative. When it comes especially to something like a risk-free asset. If anything, I think all you're seeing is a move not away from America or away from American bonds, but you are seeing an indictment on the idea of the American policy agenda right now,
right.
And particularly the American policy agenda as it relates to the longer end of the bond curve. So I look at it less like people are not interested in U.S. bonds, or less like people are leaving or sort of have a negative American sentiment, and rather that people are less interested in long-dated American bonds and more interested in shorter-dated bonds, simply because they don't want to take on the duration when the American policy agenda is the one that it is. But because the correction was so quick when we had the bond spike, meaning the policy correction was so quick when we had the bond spike in April, I'm optimistic that the Trump administration policy making is actually pretty sensitive to this. Probably because of the Treasury Secretary more than anything, and so that's why. I mean, listen, this keeps happening. Obviously, I'll be wrong, but I look at this as a good thing, because I think that the more damaging aspects of the American government's policies, the sooner they are adjusted, the better off everybody will be. And if part of the adjustment process is a slap on their as a second slap on the wrist now from the bond market,
like a wake up call, right?
Like, what are you doing?
Yeah.
I mean, we got this in April, and I actually was happy to see this, and not in terms of market returns, but in terms of market power, to offer a direct referendum on what I think are some misguided policies, and I think a lot of people think that.
I think so too. Also, this kind of ties in, Dylan, with the fact that it was the 20-year that was affected. Of course, the $16 billion sale that had that weak demand seen. But like you, I kind of think, well, this is just kind of like a wake-up call. Markets kind of thinking, well, is this something that we should be worried about? But we now know that there is this tepid investor demand on that end of the curve, and I kind of think, well, this just gives the U.S. government, time to retweak their policy, and like you said, they're very sensitive to this. Going forward, though, if we do see, earnings start to really get worse, and we start seeing, a lot more mood music surrounding the U.S. Jobs market, starting to show cracks, are we going to see a repricing of this market?
I'm optimistic. The obvious risk, the biggest risk is some version of stagflation where you do have sort of whispers of inflationary pressure because of the American tariff policies or even the uncertainty around American tariff policies that are driving up sort of the supply chain price infrastructure and reducing growth investment. So I think that's the obvious risk is you get some growth, slowing growth with inflationary pressure.
And let's take a look at let's take a look at.
I think that's the wall of worry that the market climbs, though. Sorry.
No, go on. Yeah, and that is the wall of worry that we are seeing that's causing these ructions. Just showing the S&P right now, and we have seen such a fast, correction, really remarkable from the correction in the 2 weeks in April. And it looks like all is forgotten, all is forgiven, and now we're approaching that 5,950 level once more. I mean, we crossed it briefly, but we are fast approaching that level again. I mean, it's really remarkable, isn't it? And I think we're just going to, all this means whether or not there is stagflation, whether that materializes, we're just going to see more volatility ahead. So a lot of our trader friends have been asking, how do we trade this, Ange? How do we look at this? When I spoke to the vol desk earlier this week, and they were saying the skew is still to the downside. Your charts there, I believe, are also showing something similar. Dylan, I've been looking at numbers on short interest, and what I've been seeing is that this week itself, we've got short interest on super micro computer, over 21% of shares sold short. So just putting that up there. Super micro, one of the ones that you watched, Tor?
I mean, yes, but I mean, I look at super micro really through the lens of the AI story, I guess, more than I do through the short interest story. And I would interpret interest, I think, the way most people would, as fuel for a rally more than obviously more than a specific indication of negative sentiment. One of the things that I also like right now is out of the money calls on IBIT on the Bitcoin option or ETF or whatever that thing is. So there's a couple thoughts. One, I do think you're going to see some stagflation positioning, which I think is probably gold positive. Although I'm more like I don't really play with gold at all, honestly, but I do play a little bit with silver, and there's a little bit of a vol spike in silver. So like for silver, I put on some put spreads, stagflation hedge plus sell some vol, and then I like the Bitcoin call. Because I actually think, even though I think crypto should be banned and it's a catastrophic waste of all productive resources for mankind, I also think that it's likely Bitcoin goes higher in this environment, especially as it maintains itself through all this and sort of has stabilized in a nice way. I think that volatility comes in, and I think that the price is more likely than not to creep higher.
Yeah. And just backing up the chart here, it is has been creeping higher this week. Ethereum lagging due to concerns over the global economy, but Ethereum does tend to lag Bitcoin. Just a reminder, trader friends, this is for pro traders only at the moment. Just whacking up the chart for our viewers chat here. Please like and subscribe if you like all the handy inside knowledge that you're getting, inside news that you're getting from us here. We've got Away from the Numbers. Good morning to you, Away from the Numbers, saying good morning. Dylan, CRM for a strangle. Any thoughts on that, Dylan? Andrew McKilvey also talking Greatland Gold. It is having a good day. No surprise that given gold is doing very well at the moment. Whacking up Greatland Gold very quickly because I know this is one that you trade, Andrew McKilvey, and it is up 2% there. Good shout out because I know that you have this on your books. Dylan, gold, it's going really well. Let's whack that up for you. In fact, it is now approaching that 3,500 level that I've drawn up there as a sort of approach point, but we are going to see, this is from a technical viewpoint, and I heard me here, trader friends, saying earlier in the week that if we break through that 3,322 to 3,337 range, then potentially a break above this could lead to, again, to 3,368. And so that is where my first stop or first point of expectation is where that's going to go. We breach that, then maybe 3,500. Dylan, you like gold?
I mean, yeah, I watch gold. I don't. As I say to Chris and Ilya, I've never had any success.
You said you like silver, yeah.
Thus my silver. But I do think that gold. I think that whether it's the gold rally or the bond market, or you're kind of in a moment of short America in a sense, or sort of risk aversion from America, I think is what's reflected, whether it's in the gold price, whether it's in the bond price, whether it's in the Bitcoin, whatever. And I just am hopeful anyway, maybe I'm delusional, but I'm hopeful that actually the risk aversion to America, which is logical and rational in many ways by virtue of some of the policy actions over the last few months and the rest of it, is more of a corrective moment, and that this is an opportunity. If anything, I would be more cautious with gold. But again, my success I would take that with, that's worth about 3 cents. So I wouldn't weigh too much on my gold opinion, but I am hopeful that all of this is that the U.S. risk aversion is an opportunity to own more U.S. risk assets, because I believe America will I believe, at least in terms of financial policy, America will correct, and I'm not that worried about the labor market. I'm very optimistic for the technology sector globally, not just in the United States, and so I think that there are positive forces that are underlying all of this that will be empowered by the correction, the slap that happened yesterday.
Speaking of which, we just had some breaking news through earlier, and it was to do with oil, OPEC Plus, and this is according to Bloomberg, saying that members of OPEC Plus talking about significant oil production boost here at their June 1st meeting. This is according to Bloomberg News again. And this comes after there was, reports of a possible July hike. One figure that I saw crossing the headlines being discussed is 411,000 barrels a day increase. 411,000 barrels per day. Let's have a look at WTI there. We know that yesterday there was this is the daily chart, people, there was a bit of a bump up. Surrounding percent there, possibly way down.
I'm an oil bull. I have been for since April. I think that because I have a favorable view of economic activity in the world, even in the short and intermediate term, I actually think that oil is more likely to go higher in the near term than lower. I've been selling put spreads going back into April. And so I feel very good about it. I actually think that OPEC has as much credibility as the U.S. ratings agencies, and so I think they should all spend time together. And they can make their announcements to each other, because I think that the oil that gets produced in the world, OPEC isn't what it used to be, and the ratings agencies maybe never were what we thought they were. But I don't think that OPEC's decisions and the production targets that they set are nearly as relevant as they were a couple decades ago.
Right, because there are always some that toe the line and some that don't, right?
Yeah, and then you have America is a huge oil producer now. There's all these non-OPEC members that are also, producers. I just think that the price of oil is driven by either perceptions of global conflict and the risk thereof, like you just mentioned, the Iran scare recently and some of this, or it is driven by perceptions of demand for global trade. And I think that the reason why oil's lower is obviously, or lower this year, was sort of concerns, the tariff concerns and economic growth concerns. Last year, oil really seemed to trade almost entirely based on conflict probability perceptions. And this year, I feel like oil's been much more trading based on growth expectations. And I dismiss the OPEC decision, and meaning I dismiss it in the sense of its relevance to price and to the oil price, the same way I dismiss the ratings downgrade from Moody's of the U.S. sovereign credit.
No, I completely agree. I do think that last year we had, tons of clients. It was remarkable, saying, "Hey, Ange, with oil, just watching the headlines on, the Bloombergs, the CNNs, and that's how they trade it every morning, keeping 3 TV stations on at any time, because it was all to do with conflict in the last year. And boy, it's pretty different now. WTI, I just want to, whilst we're on this very quickly, because I do like this from a technical viewpoint, because WTI tends to obey, if you like, the technicals. And here you saw me early in the week, trader friends, talking about this range, and we would break below. Then this is the daily chart as well. If we stay below this, then further downside potentially is likely. And you did see that we did recently break below that range that I've put in this rectangle here for you. We call this a point of interest, or a region of interest, and we are now down lower. Of course, fundamentals, and like what Dylan said earlier, important to keep in view because of the outlook there. Right, let's go back to short interest, and also whacking up the comments page there as well. Taking a look at the chat. Andrew McKelvey, glad you like gold, because I know that you trade this area. Dylan, let's talk about Beyond Meat, because that is another stock, trader friends, that is showing a particular spike in terms of the short interest side of things. Beyond Meat, all sessions there, up 0.2%, adding that to the workspace. Have you ever tried their faux meat, Dylan?
I have tried it.
What did you think?
Tried it. I found it to be questionable.
And I found it awful in that it kind of stuck to the top of the roof of my mouth.
I mean, again, there's a long history of non-meat meat, starting with the original veggie burger, I suppose.
Yeah.
And I think that you can kind of get away with it when you when you sort of hide it inside of a cheese. It's improved over the last 20 years, but it's still, look at the stock chart tells the story, because at the end of the day,
it is just absolutely.
What are we doing?
Oh, painful. This is daily chart here. Let's go up to a weekly just to show how painful this looks. And this is
wealth destruction.
Yeah, this is wealth destruction there, and short interest still approximately 40% seen there. The sales continuing to fall for this company. And last time I spoke to analysts in this space, Dylan, they were saying that the company amongst its peers also looking to bring back meat. So it's not beyond meat, but maybe a bit of meat, right? To diversify its business and try and get this share price somehow anywhere.
They could rename the company back to meat, and they could just become a cattle rancher.
Right? Yeah. Or like how BP Beyond Petroleum is now starting to sound like back to petroleum.
Yeah, exactly.
But this is a stock.
I wouldn't go near that thing, quite honestly. I don't know what we got to be crazy.
Yeah, exactly. But
why?
Look, still,
there's so much more. Yeah. Sorry, go ahead.
You're right. It's still a lot of short interest out there, and tons of potential for future decline if we don't see a change in strategy there. Right, producer Phil, how much time have we got left? 30 seconds to go. Time flies when you're having fun. Dylan, some last thoughts about what you're looking at in terms of your portfolio. What are you?
I am every time there's a sell-off, anytime there's a decline, anytime there's a scare, a spook, a rattle, whatever you want to call it. I always like to add a little bit of the AI names. I think that AI is still vastly underestimated, and I think that every time you get any pullback, I don't know if it's from a trading perspective. I'm not doing it out so much from a trading perspective, but I just think that if there's one place to nibble when things get soft, it's whether it's in Meta or whether it's in Nvidia or whether it's in even you can go second derivative from it, and like Amazon is going to utilize AI in a way that I think is going to be profound. So I just think that entire tech, anybody that's set direct or indirect to AI, I think should always be purchased on a pullback.
Yeah, buy the dip basically. Right.
For
Thank
sure.
you so much for that. We had to go because we are going to an interview with Scott Sheridan, whom I'm sure you know very well. Yeah. This is part 2, everyone. So please put the kettle on, but don't go away. Leave it on and come back with your cup of coffee or tea, because we are going to have Tasty's Scott Sheridan up next, talking about strategies and how to gain positive skew in both options and trading. Normal, plain vanilla too. That's your thing, and what he's looking at in the coming months and quarters. Thank you so much, and have a good time in Sardinia, Dylan. We will hopefully see you next week.
Looking forward. Have a great day.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, trader friends! Hey, trader friends, we're back with all sessions, and look, it's almost about to open, and here we go. My board is up, and let's have a look at some of the big winners first. Was it still shaking out there? Lumen Technologies up 11.5% there. Snowflake, we talked about this a lot with peers recently and about the earnings. Peers talking about how, our earnings about to melt Snowflake. So if you haven't caught that, do look out for it on our chats and also on the short section of our YouTube page. And what we're also looking at here is a big move up for many of the crypto related names. Amazon also, I can hear my ear, producer Phil. Yeah, Nike is now selling within Amazon as well. Nike, all sessions up 1.6% there. That means all the prices of their shoes are going to go up, is what it actually means. And also, no surprise, as I mentioned, that the crypto-related names are higher. Bitcoin surpassing that 111K level as the Texas House approved a bill to create a Bitcoin reserve. Palantir Technologies, Monkey Man, you highlighted this in a message earlier, up 1.4% there. And for those of you that have a Chipotle, they're cropping up everywhere in London. I don't know whether you've got one near to where you are watching from Trader Friends. This is the burrito maker up 1% there as well. Having a look at the losers list for you, Hims and Hers Health, Monkey Man, down almost 5%. Interestingly enough, Monkey Man, I checked for you, Hims and Hers, seeing quite a bit of short interest, and just guessing that up for you, Hims and Hers. One of those that I'm keeping an eye on because the short interest recently nearly 27%, nearly 27%. The company has been, of course, doing well from semaglutide, is that how you say it? Semaglutide, due to drug shortages, but that is kind of like clearing now. So we're kind of seeing that, it reflected as well. And Hims and Hers, of course, selling all sorts of medicines and services to the, not just the obesity side of things, but also healthcare, beauty, that sort of stuff. So down 5% there. Beyond Meat, we talked about that earlier. Haven't seen that uncrossed just yet, but Novo Nordisk also in the headlights here. Novo Nordisk down 1% there on all sessions. Recently, there was an interview with Novo Nordisk and the bosses there saying that they are trying to very quickly diversify because, their key products that helped it gain the lead in the skinny pen space is now seeing a lot of competition. Moderna also down 0.5%, and Affirm Holdings also in the red list there. No surprises there because, as you have seen recently, Klarna being whacked, all those buy now, pay later companies being whacked because in uncertain times, really uncertain times, maybe people aren't even, cutting their payments into bit size to pay off later. They're seeing a real kind of pushback, lack of demand there. Right, let's have a quick look now, if we may, just very quickly at the indices before we go to Scott Sheridan's interview. And we are seeing pretty much a mix day there, despite concerns around the US bond markets, despite concerns about, the burgeoning debt pile there, and also despite concerns over the
Are we seeing stagflation? Are we seeing an inflationary environment back again? Those sort of concerns over the economy. Right, stay with us because we are going to go to the Scott Sheridan Part 2 right after this.
Nothing goes straight up. Nothing. And for me, obviously, I love the successes. I'm not going to say I don't. The successes are a lot of fun, but I focus more on my brain goes to what are the gotcha moments? What am I missing? Especially when things are looking really good. What am I missing? There's a train about to come down the track that's going to run us over. Where's that train coming from? Yeah. But this was one that was just completely out of our control. We had another one, which I'm sure Tom has told you about, where our developer, the company that we're using, the developers originally to build Thinkorswim, they had a falling out with their business side. The business side was in New York. The developers at the time were in Russia. Tom called the business side. They said, we can't support you. You need to go with the developers, which we did. Mm-hmm. Tom will deny this, but he knows it's true. We owed them, we were paying $25,000 a month. That's what our minimum was. And I said, just pay them the $25,000. We owed them 2 months. Pay them the $50,000 and be done. He's like, why would I pay them? They can't facilitate us. I said, because then we've completed our contract and there's no issues. And he's like, I'm not doing it. I'm saving us the $50,000. I'd say about a year and a half later, he walks over to me and says, aren't you going to thank me for saving the $50,000? I am not kidding you. I think that day or the next day, we get a lawsuit. They sued us. We had 11 or 12 people that got up and told the truth. They had one person that got up and lied. We lost $4 million.
What?
Yeah. Tom, now I say at that time we could afford it. It hurt. Yeah. But we could afford it. Now, I still laugh about it and say, had we paid the $50,000, there would have been no lawsuit because we would have said, look, we honored our commitment to you. Tom says greatest $4 million ever spent because at the time they were the best dev team in the world, and they really helped to build it. So anyway, those are two stories.
And those were the two real low points. What about when you started knowing there was interest in an acquisition of the company?
So we took money from a private equity in 2003, and at the time it was the largest investment in a private company in Illinois, and it was really, really flattering. It was great. Tom and I always say, if you have a business and you are looking to raise money when you don't need the money, if that's possible. Don't wait until you need it, because if you wait until you need it, they got you and it becomes super expensive and you're going to do basically whatever you can to secure the funding. We took the money. We didn't need it. We were cash flow positive a few months after we launched, which was amazing. But you always want to be prepared for a rainy day. So we took the money. It was $23.5 million. So it was a lot of money. I mean, it was a lot of money back then. It's a lot of money today. But back then, it was a huge number. I mean, back then, you didn't have companies crossing the $1 billion mark every day. So we took the money and we never touched it. But I will say it gave us a lot of comfort and a mindset to say, you know what, we can take a little bit of risk. We can push a little bit harder because we had some extra money in the bank, but ultimately we never needed it. Now, having said that, my cautionary tale for people, if they are going to take money from private equity or some group, get whatever you want up front. Do not think you're getting anything after you sign the contract, because they do not care. Once you sign the contract, that's it. So if you think you want something, ask for it. You might not get it, but you have a better chance of getting it prior to signing than you do after.
That is great advice, and I've heard that on so many people caught on the wrong side of the deal.
Yep.
And if you end up going back to them asking for more, then you're going to have to give a bit of your soul and heart in the deal as well.
Yep, for sure.
And then so then what about the when the company eventually was taken over?
So when we ultimately sold the business to TD Ameritrade, we were already publicly traded. So we had merged with a publicly traded company in 2006, and then TD Ameritrade bought the company. We closed in June of 2009. So we were publicly traded at that point. Now, as again, super exciting. you're getting paid, you're going, wow, it's a publicly traded company. If I could do something over again, I might not have done that.
Wow. God, that's fascinating.
Yeah, I might not have done it, because once you're publicly traded in a regulated space, it just, the fun gets sucked out of the room. There are so many things that you have to do from a regulatory standpoint. Now I'm used to it, but I said this before I came back to do Tasty. I said I'm never going to be in a regulated space again. This time I'm serious. I'm never getting. I don't know what my next role is going to be, but it's not going to be in a regulated business. But once you sell the company, you lose control. You know, there's a board, there's just things, there's shareholders. So we were still big shareholders, but we didn't have the same control that we had. When it came time and then obviously we had the financial meltdown in 08, 09, and the stock was really getting hit. So at that point, we knew that we were a target for a takeover, which it was, or there were two other opportunities on the table. Now, I'm not going to go into what they were, but there were two opportunities. Tom wanted one, I wanted the other. TD Ameritrade was the third. Neither of us wanted TD Ameritrade, but at the end of the day, we both voted for TD Ameritrade because as a board member, and if we had the fiduciary responsibility as shareholders, it was the easiest, cleanest, safest deal.
Okay.
So that's where we ended up. And, you know, it was great for, you know, while we were there. But then clearly things started changing when they started pushing down the corporate side of what they wanted to do. And Tom and I both departed. He came over, started the network. I took 3+ years off, which was amazing. He kept trying to get me to come back, and I kept stiff-arming him because I just really loved. He's like, how could you love not working? I said, it's amazing. I got to be with my kids. You know, people would ask me, you know, what I do, and I said, or when I'm going to come back to work. And I had a simple answer. I would say the day I don't want to have lunch with my wife is the day I'm going back to work. And when I agreed, she said, what did you just agree to? And I said, I'll tell you at dinner. I told her, and she just looked at me. She's like, you don't want to have lunch with me again? And I said, no. I love having lunch with you, but to have done what we did at Thinkorswim was once in a lifetime, and really it was spectacular. Yeah. I said, to have the opportunity to do that a second time, I love challenges and I have to give it a try. Wow. And we did it again. So it's really impressive. But this is my last time in the brokerage business. Whenever my time ends here, I'm not doing it. That I will not do this again.
How different has the second journey been?
Similar is a really good question. Similar in many ways. Just the big difference, I would say, is when we first started Thinkorswim, we're like this. We had blinders. We weren't blind, but we just didn't know what was ahead of us. Yeah. And every day it was like, oh wow, okay, we got to do this. We got to do this. Oh, we forgot. Okay, we need to do this. When I came back, I started with 4 people. So there were 5 of us that started the brokerage side of this business, and I said to them, challenge me all the time. Don't ever feel you can't challenge me. I said, but trust me, I know where we're going. So the big difference this time was I didn't have blinders on. I knew that we had to go from here to here, but now my arm is fully extended rather than being right in front of my face. So if there was a major difference, that would be it for me. Just having a roadmap. Now, we didn't do it exactly the way we did it. You know, at Thinkorswim, we wanted to do it differently. Our platform's different. You know, the platform that we built today, we think works better for trading styles today than what the platform we built for Thinkorswim. I'm never going to speak badly about it. As I say, it's my baby. Yeah. But we moved on. But again, knowing where you're going and knowing what the end product is going to be is really, really helpful. And it's unusual because typically when somebody starts a business, they're not going to go back, sell that business, and start the same business again. So, you know, in that sense, it's highly unusual to have that opportunity, but I had the good fortune of being in that position.
Fantastic. Now, when it comes to the weekend, what's a typical weekend for Scott Sheridan?
What time of year?
Let's start with as we're coming into summer.
So, as I'm sure you know, Tom and I love food. So I love to eat. So I love to cook. I also love to cook. For me, it's just super peaceful. It's creative and it's peaceful. And I think a large part of it was when I was in the pit. Again, you're just getting banged all the time. So I'm not a big crowd person anymore. I feel like I've given my time to the crowd. So for me, it's creative and it's fun and it's relaxing. So I do enjoy cooking. My wife and I do go out to eat a fair amount. So food is always on the list. But this time of the year, I like to play golf. So the weekends usually we'll have 1 or 2 days of golf. We have dogs, take the dogs out for a walk. I like to read. There's good sports on. I like watching sports. So stay busy, go to bed early, wake up early. I am big on Peloton, so I like to ride. I actually I woke up early this morning. I did a 25-mile ride. So I'm riding a little over 100 miles a week right now, it's just great. It makes me feel good. As my dad used to say, use it or lose it. So
Yeah.
I keep trying to tell Tom that, and he just keeps giving me, he loves to do this, like the chirping. So I try to get him to do things, but he's into walking, so that's good for him. But I like to do something a little more active. So I like to stretch. I like to ride.
And then what about interests outside, whether they be charitable or other business interests? What keeps your mind going outside work?
So I was on a board of a children's hospital here. I just stepped down after 13 years. So that was my wife and I were both very involved, and that was our big charitable contribution. We get invited to a lot of things, so we do like to go to events. We do like to help charities that we believe in. That's one thing that we definitely enjoy. I don't know. It's funny. I don't think about it, but I don't sit around not doing anything. So I'm going to have to get back to you, and I'll write it down. I'll say, okay, here's what I did. Like tonight, we're having friends over, making food, looking forward to it. So I don't know. Brilliant. But I definitely stay busy. I am not one that likes to just sit around and do nothing.
We heard from Bat that unfortunately on one occasion on the floor, he didn't quite make it to the bathroom on time. What stories have you got from the floor that really bring back some memories?
Well, fortunately, I never had that experience, but I will say that I never got the flu shot up until I was on the floor, and I got the flu because people are just spitting, and it not intentionally, it just happens. Yeah. And every year since then, I get the flu shot because once you get the flu, you don't want to get the flu again. So that's one of my big takeaways. One of the things that for sure, because you stand around the same guys all day. It's very territorial. The pit is extremely territorial. So Tom and I were in one section. Bat and JJ were in another section. I mean, we would trade with each other, but you're primarily trading. You're trying to trade with the brokers in your area. You definitely got to know everybody's stories probably a little too well. You'd hear the story, you're going, I can't hear this story again. Okay, you've told this story like 10 times. So, but it was an amazing experience. I wouldn't trade it for anything, as a way to start my career. It was just a ton of fun. But I look forward, I don't look backwards. So that, as I said, that was my building block to meet Tom, built Thinkorswim. We had some other businesses along the way. And now we did Tasty, and we'll see what's coming next.
If you were going to give your money to Bat or Tom, which one would you invest with?
I am not answering that question.
Damn it.
You are not trapping me on that one. That is a lose-lose proposition.
Or Vecchio. He's the other option.
I'm not answering that. I'm pleading the fifth.
Granted. Now, yes, sports-wise, what about, beforehand, as a kid growing up, was there any sports you were into especially?
I love all sports. So the problem for me, I played a lot of baseball. I played a lot of basketball. The problem for me, the high school that I went to had 3,200 kids, and unless you were outstanding, you weren't playing, on a team. So I played with my friends, played intramural. But if I said my go-to, I like golf, I like tennis. I hate saying used to, but I used to play a lot of basketball, softball, baseball. But today, golf and tennis, sticking to the country club sports.
Absolutely. And other pastimes, you're on a TV show now, occasionally. Have you been on any other TV shows before?
It's funny because my wife doesn't think it's funny, but I think it's funny. She went to school for broadcast journalism, and I'm the one that ended up on TV. Yeah. So, that's the way the world works. I have done hits off and on for different shows, when I was on the floor in particular, but, we'll do hits on stuff. JJ and Tom more than me, CNBC, et cetera.
Yeah.
But I'm open, but no, primarily this is it.
It's amazing. I'll be out for a walk on a Sunday afternoon listening to a podcast, and the people on the podcast will bring up Tasty. and they'll say, "Oh yeah, JJ and Scott and Tom." One of the guys had actually worked with you guys at Thinkorswim, and he was trying to say that he introduced the berry to Tom.
I don't know who it is, but sold.
Yeah, yours.
Sold. I actually think it was. I have to ask Tom revisionist history with Tom, so I don't know if I'll get the truth out of him. But I think it was some marketing company, for some reason, that's what I'm thinking, sent it. And then Tom loved it and he put it on. We actually had a goldfish, when we started Thinkorswim, that a marketing company sent. It was catchy, like, hey, we're sending a goldfish. I mean, not really fair to the goldfish, but we kept that goldfish. We actually named the goldfish Dead because we didn't think the goldfish was going to make it. I think the goldfish survived for about 5 or 6 years. And unfortunately, when the goldfish passed, we put a message up on our website about, out of respect for Dead, the goldfish.
No. God, yeah. And what's the funniest sort of fan mail, or how crazy do the viewers get?
Oh, amazing. So my 2 favorite stories were one, TP, Tom Preston.
Yeah, I've met him.
Brilliant. Yeah, brilliant. We were making videos about the platform. So when we created the Analyze tab, Tom and I are like, nobody's ever going to use this. But TP's like, no, this is amazing. We're like, okay, go build it. Nobody's going to use it, but go ahead, have at it.
Yeah.
So I did a couple of videos on the platform, and we try to keep them, 5-10 minutes. So I said to TP, will you do a demo on the Analyze tab? He's like, yeah, sure. So that's it. I don't even think about it. And like, hour and a half later, I see him and I'm like, hey, what's going on? He's like, I just finished the video. And I said, what video? He said, on the Analyze tab. I said, you just finished the video? And he said, yeah. I said, how long is it? He's like, an hour and a half, whatever he said. I said, nobody's going to watch this. And his answer was, it's perfect. So I get an email from some guy who his daughter has colic. Now, for anybody that has a child that has colic, it's miserable. I mean, they don't sleep, they're up crying, they're screaming, et cetera, et cetera. So he sends me an email and he said, I was up in the middle of the night, couldn't sleep, my daughter's screaming. So I figured, might as well try to get some benefit out of it. So he puts on TP's demo, the video, for the Analyze tab. And he said his daughter was sound asleep in 5 minutes. So I sent it to TP. He's like, that's not funny. The other one was when we started, we gave away a book. It was called Coulda, Woulda, Shoulda. Just talking about options trading. And then we decided we were going to be done with the book, and we started giving away the monkey. And we got an email saying, hey, how come I got some stupid book and my friend got this really cool monkey? How do I get the monkey? We're like, okay, we'll send you a monkey. And the best one of all was a guy sends us an email and says, my girlfriend just broke up with me, and before she broke up with me, she took the monkey, the Thinkorswim monkey, ripped it apart, and threw it off my balcony. And he said, I don't care about her. Any chance I could get another monkey? So
absolutely fantastic. Do you still have any monkeys left?
I do. And actually, I've saved some, and actually, I'm moving. And my wife was at our house, and she's like, I have a whole bag of monkeys. What do you want me to do with them? I said, you can throw them away. I said, I think I have enough monkeys, but I still have enough. Those have to go out as, at least onto eBay. Yeah, you know what? Maybe I'll bring them, throw them, because we have some guys who are with us that think or so. Maybe I'll bring them over so they could put them in their basement somewhere.
Yeah. Well, Scott, when you get the chance to come across to London, we are absolutely ecstatic to have you over. We're going to take you to some really nice food restaurants. It's a shame you can't manage across with Tom and Bat in a month's time. But yeah, very much looking. Thank you so much for sharing your insights today. And
my pleasure.
Continuing to be the champion for the retail trader. What you guys have done for us, in the retail trading side of things, it is just unprecedented. So yeah, thank you very much.
I appreciate that. Have a great day.
And to you as well.
Thank you.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, trader friends, the moment you have been waiting for. Many of you asking me, and when is that Jolie lady coming back? Well, she is back here, and I have convinced her to be with us every Thursday. Thank you so much. Everyone's going, oh, because it's great to have you on, especially with such a diverse crowd of trader friends here. Some of them very new to the options space.
Yeah.
So we have kidnapped her from Chicago for you, especially for this show. And you are now, what, 4 weeks into your time in London?
About 3. Yeah, just hit the 3rd week mark today.
Amazing.
Yeah.
Already she's really, adaptable. I threw a sarcastic joke at her and she got it. I was like, oh, I can't hear you, Phil, because of these loud Americans. And she laughs. There you go.
We are very loud. It's embarrassing.
I know. And did you, Frank, when he was here, asked me, which side of the pavement should I walk on? Are you having this issue?
I too asked myself that same question, and it seems that there's no side. It's a free for all.
It is a free for all. And there is no side, just like in trading, which is why we are going to have a look at some options strategies that you can use alongside, whether you're going long, whether you're going short, right? These strategies that you can find using the option space just helps you come in a different way, gives you the ability to cover your back in case the trade goes against you. So I have taken some time to crunch some numbers, to look at the the 5 stocks, 6 stocks that are looking like the most shorted for this week. And super microcomputer SMCI is one of them.
You can definitely start there. SMCI.
So it's up at the moment, all sessions 2%. But of course, the numbers I'm looking at are, sort of this week and into next week.
Right.
And short interest at the moment, more than 21% is the figure I'm looking at. So if someone was going to look at this, and indeed looking at it, share price, that was a daily view. This is the weekly view. And let's move out to the monthly as well. And you can see that since its high in March 2024, it has had a huge slide, right? From around that 12K mark all the way down to the 4.2K mark. And the stock's valuation, still punchy relative to its peers. And 66% gain so far, but it's been down recently. And the accusations from Hindenburg research related to accounting issues also clouding that outlook. So those who are looking to short this, what can they do on the option side to complement this strategy?
So there is no shortage of strategies you could use, pun intended. But for today's lesson, I figured we could talk about single leg options that have short implications. So that would be either a short call, so you're selling a call position, or a long put. You're buying a put. Both of these will have the same implications in that should they go to exercise assignment, you will end up with 100 short shares. Why 100? Because one option contract reflects 100 shares of the underlying stock. For the short call, you're selling to open. Should you seek to close that, you would be buying to close. Conversely, for the long put, you would buy that up front and then sell that to close on the way out. So we could take a look at that for SMCI. Has discussed the prices that we're going to see. They're not live. It's all based off of the closing values from the close yesterday. The U.S. markets are not open yet, but we'll see those change and update at 8:30 a.m. Central Time.
Which is 2:30 our time.
Indeed. Yep.
I know that because I still instinctively, after working in New York so much, I still, no matter where I am in the world, I still go, I need to check my phone. Or I need to check, how Wall Street's open.
Yeah.
So it is a bit of it's a big problem when I'm in Asia, actually.
Yeah, that's a time zone I'm not even familiar with.
Right. So give us a run through.
I would say here we are on the Tasty Trade IG platform, the combo. I have just selected May 23rd only because if I were somebody who wanted to take advantage of this move now, I would focus on the closest expiration, right, which is Friday, the 23rd, tomorrow. So another thing I did want to mention too is for both of these, I would say majority of options traders don't actually seek to take an exercise or assignment. Most of those guys are just closing them out only because they may not have enough in their account to take on the whole notional value, all different kinds of factors, right? But for this example, we're gonna just focus on as if we were to take assignment or to exercise the option, just so that we can get the stocks involved, because I'm sure people are pretty familiar with stocks and they're like, how can I take advantage of my stocks with this? So if you were somebody who wanted to buy a long put, for example, so that they would take assignment of those 100 shares, those short 100 shares, you would buy a put option. So right now, I am in the trade tab here. My asset type is on options and I am in table mode. Couple different ways we could buy a long put. First, we could touch on the strategy selector here, and we would go to option. This is on short put already, so I can just click short and it will go to long. So we're buying and hit this blue arrow. Boom, there's the order ticket. Look at that. And you'll see it's taken us to pretty close to in the money. Not quite, but yep, there we are. SMCI closed at 41.65. So if we were technically in the money, right, it would be at 42, because that means we can sell at a price higher than what the market's offering us. It's going to be more expensive. Look at these prices. If we're asking the ask price, what we're buying for, 135, which is pretty different from what it auto defaulted to at 0.85. But if we thought it was going to drop and that this was still going to be valuable, and we'd be selling at a higher price than what the market opens. Say we've got a bearish outlook. We think SMCI on Friday is going to close at 39.5. This would be a steal, right? 85 bucks. And the difference between 39.5 and 41, that's going to be 2.5. So 250 bucks, right? That would be like, if we were right on that one, we pay $85 and then we get 250 bucks on the way out. Cool stuff. Yeah, so that's pretty much the concept for this. If I were somebody who wanted to end up with short shares come Monday morning, or rather, the expiration's on Friday, but you'll see it reflected in your account on Monday after everyone reconciles and the Options Clearing Corporation reaches out to the brokers. You'll see your 100 shares, short 100 shares on Monday. Then you can buy into close for a profit, theoretically, just depending on how things shake up Monday morning. But yeah, that would be your long put here. You could use this to also protect yourself if you have 100 long shares of stock. So say you were a really clever investor. You bought SMCI when it was at, I don't know, 37, and you wanted to ensure that you're still going to get to sell at a higher price. You could buy a put option at 41, which would allow you to sell at 41, assuming that it was in the money, right? If it's out of the money, it doesn't really make any sense to hold on to, because you can just sell it to the market for a better price. So that's just a mini little rundown on the long put.
I love it. And how long does it take for it to like shake out? You know, when you say that, you know, the markets, you know, everyone's kind of like, you're waiting on it. Is it instant?
Good question. This is not talked about all that often, actually. So say you were somebody who was intending to exercise their option, right? It's Friday, it's in the money, I want to take assignment. Most option traders don't do that. They're in it for, you know, in and out kind of thing. There's other factors, time value, volatility, all this stuff.
Okay.
But yeah.
And am I right in saying that most options traders don't wait right up to that point anyway?
Yep.
They just close before you even get to
Exactly.
expiry?
But say you were somebody who had 100 long shares, you wanted to protect those, and you saw that the 41 put was in the money, looking like it was going to expire in the money. You're like, hey, I would rather sell these now before things go down, and you wanted to take assignment. So what that would look like is these guys expire Friday. So we're going to know like Friday at 7 p.m. Central, 8 p.m. Eastern, when the extended session's closed. We're going to know if you're a long option holder and this guy expires even 1 cent in the money, you're taking the assignment, right? You're long, you have the autonomy, you call the shots, which means Monday morning, you would wake up with 100 short shares, selling them above where the market closed, right? And if you had those 100 shares, done deal, right? If you didn't and you were shorting, right, you were just selling to open, and you woke up with those 100 short shares on Monday, then you would need to hope that the market dropped a bit so that you can buy them back for a lower price to solidify your profit.
This is all very exciting stuff. You can see me sort of watching as, she's sharing the platform for a reason. So here is the question. Supermicrocomputer is all sessions on the IG platform. And so, for example, you're going off the close.
Yep.
Right?
Yep.
But I know, looking at the IG platform, putting up my chart here, that we are now up 1.5%, right? And there was showing you the minute chart here as well.
Please.
Right? There was a gap up. Yeah, and there was enthusiasm, and we're seeing, strong sort of interest in this region here. If I could tell that maybe, this momentum is continuing, volumes, let's say, are moving higher, and this might push, this up further. Could I use the option side of things for, a shorter term expiry to take advantage of this movement? Let's say I think it's going to go higher tomorrow.
Good question. So the options market, the listed options market, so your US options and futures account, right? The tastytrade IG platform, which is separate. Those options, they're only tradable when the market's open, the listed options. Stock different. Stock ETF, we've got extended hours, but they're only going to move, when the options market really is open for the listed options. But you could definitely use your IG platform to they're kind of great counterparts to supplement them, right? If I, just being from the States, didn't have access to this platform, so to speak, I would kind of be guessing a bit more about what things are going. Whereas this is nice supplement where you can check on how things are going in the interim, especially if you're somebody who doesn't need sleep. I'm not one of those people. I need to sleep. But if you were watching the markets all the time, yeah, you could definitely use this as a great supplement for that. But no, these are not tradable. But if you wanted to use your IG platform to supplement and get the research behind your moves early in the session, beautiful. Wow. Yeah, great. You have all information you need.
Yeah, drink that coffee, people. Don't need to sleep. Don't need to sleep.
No.
Boise asking on the chat, is this why people typically sell covered calls? And Boise is saying short calls. Don't you need a lot of capital? Because if the stock rises, roofs above your strike price, you have potential unlimited losses. That is a
boom. Yeah, exactly. A short call, you need a margin account first off. You can't do that with a cash account because it is a riskier strategy, right? Long puts, you can do in a cash account because you are the option owner, so you have autonomy, you call the shots. But if you're doing a short call, we're going to see the BP effect, the buying power requirements a lot higher than if we're just buying a put option. You'll also see max loss is infinite, so spot on, that's exactly correct. So you need this much capital in order to put on this trade, which makes a lot of sense because it is risky, but you get a credit coming up front. And for short options traders, which we can get more into this down the line, I feel like I'm throwing a lot out. But for short options traders, the goal really is to let them expire worthless and you get to keep your money. So it is a riskier strategy, but you do have money coming in up front. So it really just depends on what your risk tolerance is and what kind of trader you are. But just for curiosity's sake, let's buy the 41 put for curiosity's sake. Look, we only have to cover the debit, $85, right? It's a lot less riskier of a strategy for the same direction.
And let's whack up the comments page again, producer Phil. Boston Frank, thank you very much for that information. Hindenburg there, not in business anymore. Do send me emails about that, because if you watch Super Microcomputers, would be good to touch base with you. Also, the interesting thing that I found when I was with Tasty over there was there was this constant binging on the platform, because
oh sure,
yeah. So every time something gets filled, it bing, right? Frank was laughing at me because I come from a plain vanilla trading background, and he said, and then you place the deal, and I said, okay, and then do we take it off after this? No, you can wait for a week. I'm like, I'm not used to waiting a week. What are you talking?
Yeah.
Or check on it in a month's time if that's your. And I'm like, this is making me very nervous.
Right.
So in terms of duration, we talk a lot about duration of our portfolio here. Is there a okay duration for the strategy that you just put? Like, what is your usual? What is your usual duration?
It so depends on your goals and what you've got going on already. If you are somebody who wants to protect your shares with options, you're probably going to have a different timeline than somebody who wants to take advantage of a quick move and is day trading. Tom does a really great job of explaining that. And since I'm licensed, I can't formally give any trade advice or anything like that. So I would say if you come prepared with something specific about, hey, I'm in this scenario, this is my goal, I could tell you the outcomes of that goal, right? I could tell you this could happen, that could happen, but I would say there's not one size fits all for timeline.
Okay.
Yeah, unfortunately, which makes options tricky, but also addicting and also fun.
Yeah. Because everyone's timeline is super different. I also noticed that they almost all closed out before the end of their strategy.
Yep.
And then there were times when it closed out and they would go, oh, I didn't know I had that on, because some of them have so many.
Yeah. They
20,
probably
25 open positions on.
Yeah. They're crafty, they're clever, they're, because they're in it all the time, their risk tolerance is probably going to be different from just somebody starting options trading. There's nothing wrong with that. In fact, I don't think people should really go big right off right out of the gate.
Blocks, yeah.
Yeah, because options are risky and options are difficult. But they most likely closed out all of those because they didn't want to take exercise or assignment, which majority of options traders do not. So you can use these guys in all different kinds of ways. Again, I think I've said it for the third time now, but definitely for stocks, ETFs, you can protect those, or you can maybe get some income on them, such as the covered call, which we've talked about before, or you could just say, hey, forget this. I don't want to deal with the notional value of that. I only have so much capital I can invest in, so I'm only doing a little bit, maybe not 100 round shares of something really expensive. If you're in that boat, then yeah, you can get still participate and make moves with just the options themselves, because you don't have to uphold the whole notional value. And when I say notional value, what I mean is you don't have to put down $416 for 100 shares of SMCI, right? You could just pay the $85 for the premium if you're going to go long, and still get to participate as long as you're closing out before expiration.
Yeah, that is the key, closing out before expiration. The third thing that I noticed whilst I was there was there's always these, chatter around triple witching.
I'm trauma.
Are you scarred by on triple witching days?
Yeah,
It's gonna tell us what happened.
That's when everything expires. Everything expires. I always called myself the fourth witch on triple witching.
Did you forget to put it on your diary or?
No. We just get very busy, which is good. The energy is good. But you know, it's going to be one of those days which may take a year off your life or so.
So for those of you new to this, it is the third Friday of March, June, September, and December. I got those months right.
So, yep. It's when the futures contracts expire and roll over to the next month. Conversely, the options, it's the end of month options too. So it's just, you know, there's a lot going on, which is great. It's great for the market. It's just, yeah, you gotta stay focused. And on a Friday, you know, a lot of folks in America, I don't know if the UK is like this, but a lot of folks in America, they're like thirsty Thursday, like let's get going, let's drink. If you want to trade, that's not for you. You gotta be responsible, getting a good night's rest before triple witching.
Yeah, and be like game face on.
Game face on.
The thing that really surprised me was like how different triple witching day is. You know, volatility is crazy. This means faster price movements.
Yep.
And less liquidity. And then I realized why everyone was kind of like, okay, gloves on.
Yeah.
Right?
Yeah.
Whereas we don't see this as much you know, over here. Talk us through some of the complications that you could see.
Yeah. Again, if you're like
one of those Fridays, let's say you forget.
Sure. Yeah. If you forget, our risk team in general, like both across from IG and Tasty, I mean, they do their best to mitigate risk so that you don't put yourself in a really sticky position before expiration, I would say. So, I mean, aside from that, I would say, you know, if you're a new trader, your risk tolerance is really low, you're probably not going to want to jump in on triple witching or even a Friday, like expiration day for that matter. Of course, there are options that expire daily, but I'm more so speaking to like the equity options, ones that like only expire on Fridays. So if you are new to options trading, I would say, you know,
Maybe let it pass or do it, you know, get it out early before triple witching happens if they're beginners?
I would say if your risk tolerance is low, you don't have a lot of experience, even if your risk tolerance is high, there's so much volatility, which is great sometimes, right? Like you can take advantage of a big move, but it can also really hurt you. So it could also really move against you in a really tricky way. So you just have to have your guard up. Yeah, and if you are like shorting, for example, where there is like unlimited loss, you may want to get out before, you know, you see a lot of volatility approaching, right? But again, all of this is circumstantial.
Right, trader friends, any questions, bung them here on the chat. We'll get them asked, you know, tell us what you're trading so then we can give you and get Jolie to talk about an option strategy that will suit your time frame and your risk appetite. Also, don't forget to hit the like and subscribe button because that will aid us in keeping Jolie well fed and well heeled here in London. She has not yet seen, you know, the sights, and I think you haven't gone to like enjoy the West End yet.
Yes. Oh, I may go see a show in the West End this weekend.
Oh,
yeah.
Which one?
The Connor McPherson one, I think, is the playwright's name. I don't remember the title of it, but that's the one I was interested in.
Tin Roof?
Nope. I'll bring it up next week. If I end up going, I'll talk all about it. I love that stuff.
Amazing.
Yeah.
West End here is incredible, but you need to book early because it's gone back to levels, I think, before COVID now. So, and tourists, the place is rammed. The whole, right, everywhere. I'm sure you've seen in the pubs, you have to queue now.
Yep, constantly.
What is that all about?
Couldn't tell you.
Yes, please hit the like and subscribe button to help us towards a new belt and keeping Jolie here well heeled. Mango, waka. Tell us what you are trading. Beyond Meat is one that I am looking at, just whacking that up here because Beyond Meat, we talked about this with Dylan earlier, and this is a stock that is in pain. So just adding that to my list, but look at that. This is the weekly chart, trader friends, but let's show you the monthly, but you can see how far it has slid, right, since its heyday back in 2021, and it just keeps on hurting. This company, which makes fake meat, I tried it out when it was first launched and felt that it was a good substitute, but you could still tell. You could still tell because of its texture.
Yeah.
In terms of crunching numbers on, where the short interest is, Beyond Meat, approximately 40%. So further pain to come. The company is still struggling to turn its strategy around, and sales really hurt in the first quarter. I believe it was down some 18%, and looking like potential decline. So this is like further short. To me, how would you use an option strategy to complement this view?
Like if you were already holding on to the stock, you mean, and you were like...
or no, you're shorting the stock.
You're shorting the stock, right? Okay, but at what point did you short it? When it was at its high point, or recently?
Recently. So I am looking. I was short last week, and I'm looking to short again this week. Although on a technical basis, it's really hard to gain some sort of target.
Yeah, since it's on kind of a downturn, if you were already short the stock and it kept on going down, that would be to your advantage. So you may not even need options at that point, right? You could just buy the stock back at a cheaper price if it kept on doing its downfall.
Right.
If you were like, hey, Beyond Meat, they have just announced a rebrand, I think they're gonna go all the way up, and you wanted to protect your short shares, you could buy a call option, which would allow you to buy even lower. So you'll probably pay a nice premium. You'll probably, it may not, end overall being a huge profit, but at least you've got protection in your long call. You know that you have the right to buy it at the strike price, which hopefully will be even cheaper than what the market can offer.
Nice. I like that. And actually, one that complements that view. Let's have a look at JD Sport here, because JD Sports had a tumultuous week so far. So this is gonna whack up the daily chart for you. It was slammed. Are you familiar with JD Sports?
No, I don't think we have that in the US.
No, I don't think you do either. But it's kind of like the equivalent of your kind of like sports shops that sell all the fashion from last season.
Sure.
Like the Nikes and Lululemons, but they were from, last season. You're not going to see Frank there. Frank buys new season Lululemon stuff. And I don't know how he keeps it so clean. He swears that, they last really well and keeps talking about them. I was wondering whether he had, shares in the stock, but apparently he doesn't. But yeah, it was slammed down more than 10% yesterday, which shocked lots of people. I know some have bought the dip. Some here have said it's really unfair that it's been slammed that hard, because it was, if you see here on my daily chart, Julie, since the beginning of April, it has been in recovery mode.
Yeah.
It has now sort of dropped off too. I've put a line there just to show where we last saw this, and it was probably middle of March. And I was waiting for a break below, because that could mean a confirmed strong break below, and a close below might mean, on a technical viewpoint, that we are then heading to the next sort of like resistance support level. Last seen 13th of March. Our last area of interest was around the 13th of March. And so with this sort of volatility in play, I guess you could have two legs.
Yeah, you could have two legs up, absolutely. I mean, if there was, say you wanted to sell a vertical position, you would still have like your hedge, but there's always risk in that too. There's always pin risk, which means for any reason the stock or the ETF lands in between the strikes. But yeah, that's something we could certainly talk about down the road. That one is, verticals. There's a lot more going on, so we can definitely touch on that when there's more time to get into detail. Yeah.
Oh, thank you so much. We are running out of time, but it's been a pleasure having you on. And just a quick reminder, any questions on option strategies, do bung them here on Ask at IG or put them in the chat and we'll get it in front of Jolie for you now that she's here with us.
Yeah.
Even like, theatre options. She is fresh, brand new to the wonders of the West End. So
give me your X.
Yeah.
What have you seen? I want to know. What are the good shows right now?
Back to the Future I found quite fun.
Really?
Yeah. And of course, nothing producer Phil is saying in my ear. Of course, the best show in town is Trade Live with IG. So boom, hit that like and subscribe button to get us to 750 by tomorrow. We just need 10 more guys, 10 more people, 10 more girls. Please hit the like and subscribe button. And we will see you bright-eyed and bushy-tailed tomorrow. James, RK, thank you for your questions. I will get back to you on tomorrow's show, but we've run out of time now. And we will see you tomorrow and Jolie next Thursday.
Stocks take a fall after that auction today. It's Wednesday, May 21st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this hour. Futures market closes at 5 p.m. Eastern. If you're joining us on the platform, if you're on tastylive.com, welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this late day market sell-off. Ilya, you and I had a chance to speak midday today on Futures Power Hour, and things got worse for the wear as the day went on. A bad 20-year auction, weak bid-to-cover ratio. We see it tail through. Just where's the foreign demand? Ultimately, it goes, and so too do the yields. 10s through 4.5%, 30s clearing 5% with ease. Stocks, it's all just too much. S&P 500 off 1.74% right now. NASDAQ off 1.48%. Your Russell is your leader and loser to the downside, off by 2.86%. Bonds just take an absolute beatdown as we turn to the charts. We see a move below 111 in ZB. It's just no good. Gold, silver enjoy it, though. Maybe it's all because of the fiscal situation unfolding. Downgrade or news out of D.C. Likewise, the dollar getting sold off. It's a sell America kind of day overall. Dollar down, stocks down, bonds down, gold is up. Ilya, you and I had a chance to speak midday, so I want to kick it to Dylan first here. Dylan, when we take a look at our charts, we look at our stocks, this is not the bullishness that you and I have expected. Are the politics of it all just becoming too much for the stock market and the bond market?
I mean, the thought that I had when I saw, obviously, the events of this afternoon was that the dismissal of the ratings agency. I think this ties to the ratings agency downgrade, not that the ratings agency downgrade created the bond auction, or the bond auction result. Rather, that the bond auction result is a validation of the downgrade, and that the bond auction result is an indictment of the Trump administration's economic policy, which obviously the downgrade was also an indictment of the Trump administration's economic policy. But because the ratings agencies have basically no credibility, no one really pays much attention to them, but the bond market has perhaps the most credibility. So when the bond market won't play, that really becomes a validation of otherwise ephemeral concerns. And I do think that that is consequential in the sense that the only corrective measure that's available to American financial policy is the bond market. And this would be a clear indictment of exactly that. But Mike, what I was saying to Tom earlier was, it doesn't give me huge concern, honestly, because I think it's the power of the correction is meaningful, and I think that I still think it's a buy the dip, honestly, in this case, because I think the bond market is slapping the Trump administration on the wrist in a way that I think will have will have an influence to the benefit of the financial markets.
I mean, Ilya, that's the question now, because we did break down through the Liberation Day or post-Liberation Day lows here, and those were the levels that the administration, Trump himself, said that traders were getting kind of yippy. So we're through the yippy levels now. We haven't cleared the yearly low in ZB. Does this invalidate the perspective, as we've been toying with here, that the Trump put in ZB and ZN and TLT is dead?
I mean, maybe. Is the president back in Washington yet from his sojourn in the Middle East?
Yeah, he's been on Capitol Hill whipping votes for his tax bill.
Well, there you go. So I don't think you can necessarily say that it's the level that matters here. Obviously, the last time we were at these levels, the speed with which we got there was shocking. This time we sort of coasted there more slowly. So maybe we just don't have the attention yet from the White House to basically say this is what's going on. Maybe there's an expectation that once you get this bill through, this unclenches, although I'm not sure how that works out. I think a lot of what's going on here may be related to the fact that this bill is going to blow out the deficit by another, let's call it $4 to $6 trillion, depending on how you count it. So there's some of that here. In my mind, what we're starting to see, because this is not a rise just in the U.S., we've seen rumbles of this really since the beginning of the week, and it really has put the past several weeks of data into context. We're seeing inflation come back. We saw it out of the Eurozone data at the start of the week. Then we saw it out of Canada's data. Now overnight, we've seen it out of UK data. And in every single instance, what we've seen the markets do is respond by saying, oh, this will restrain central bank rate cuts. Now, you put that in the context of growth data that showed us in April that the world economy is expanding at the slowest rate in 17 months. That's about to get updated within the next 24 hours. It's probably not going to look any better, judging by the leading indicators. And so you're getting into stagflation territory. Not stagflation actually, but stagflation as a thing for people to ponder. Obviously, Fed Chair Powell has pondered it out loud. It's not exactly a taboo subject. Jamie Dimon has obviously pondered it out loud this week. And he may be talking his book, whatever, but that doesn't mean he's wrong. So when you look at all of this, it starts to feel like, okay, so weak growth, high inflation, central banks can't do anything. What happens? Yields go up. So you get into this thing where if central banks aren't going to push back on this growth slowdown, if they're not going to be the usual kind of counter-cyclical force because inflation isn't letting them, well, then the bond market will do the work itself. It'll demand higher yields, especially down curve. That's how you get a weak auction. It's how you get yields higher everywhere, including, of course, Japan, where there's an utter meltdown.
Yeah, I suppose that's the next question here, because it's not I mean, the U.S. is seeing yields move up a little bit faster than everyone else, but this is also not just a U.S. phenomenon right now.
Mm-hmm.
You're seeing yields push up globally. Japan, obviously, is a place of interest. Dylan, this is not a narrative that's being discussed right now, but our friend, the third leg of this stool, suggested it in passing today on Futures Power Hour, and it got the wheels spinning in my head. What if this is another repatriation episode out of Japan, right? Japanese yields are spiking. The Nikkei is coming in pretty hard. The yen's holding up throughout all this, which, shows that it's not necessarily a Japan-specific issue. But then again, that would be capital inflow to Japan. The currency is getting bid up, even as the U.S. dollar is seeing interest rate differentials move favorably. Should we be thinking about this market in late July, August 2024 redux terms? Is that even something on the radar right now, or is that just too far afield to consider?
Yeah, I mean, I don't know. I think Ilya kind of has a handle on it in the sense of, inflation and sort of economic, the boogeyman of the worst of all worlds, man, is which I don't actually think is here, but is there are whispers of it in the bond auction that open the door to 1,000 versions of catastrophic thinking and catastrophic comparisons. I don't see the comparison necessarily to 2024. I mean, I guess in the stagflation-ish sort of, in the sort of, we still have slowing growth and risk of inflation. Is the sort of never-ending threat, I guess. I still look at this like I think it's a buying opportunity at this point. Just because I think it's the market is. I think that the Trump administration is subordinate to the bond market, and that this will incentivize, a policy review. Like this is if you're Scott Bessent and you're the Treasury Secretary and you see this, to the degree to which you were complacent or compliant, I guess, with the Navarro-Lutnick agenda, I mean, I would just walk this chart into the room, and there were a bunch of other charts that are friends of this chart, and say, you can keep it up, but this is what's going to happen. Maybe they don't care. But maybe they don't care about the financial markets, but I think ultimately they care about their political capital.
Refinancing the debt at higher rates, it's a simple function of supply and demand right now, right? If we're going to be changing our debt trajectory where deficits will be higher than they were last year, the current fiscal year, the prior fiscal year, the fiscal year before that, really it's increasing the pace of spending. The market is levying a vote right now, even with the lack of demand at today's auctions. The world is saying, if this is the way that you guys want to spend your money, we're going to require a little bit more to finance that kind of taxing and spending. 110 and 25 ticks is not that far away from the yearly low. Yearly low in ZB comes in at 110 and 13 ticks. Ilya, you were with me on Futures Power Hour today. I saw that auction result. I threw in the towel. Directionally neutral, long delta, anything in bonds. And I say bonds specifically because it's not notes. But ZB, for me, I'm out. This has been a loser. I've been repeatedly kicked in the teeth for the past few weeks. It was good at times when we got those bounces off of the 112 area. Something feels different, and the trajectory, and here's what concerns me, right? The trajectory for the bond market to be the mechanism of discipline right now we're going to have to see what this House vote does. Okay, let's just entertain the idea that this is related to, it's not the downgrade, Elliot. Don't worry, I'm not going down that path. But let's say it's related to the U.S.'s current trajectory for spending.
Mm-hmm.
An echo of what Moody's and these other rating agencies have said. Let's entertain the fact that that's something that is the backdrop here. And we're plowing ahead despite independent observers telling us that we're spending too much money. We're doing it in an irresponsible manner. The train probably doesn't stop until this bill gets to the Senate. Right? The hemming and hawing, we did have an agreement with the SALT caucus. So they're out of the way right now. It looks like this could go to the floor. The Senate is going to not vote this in. They're already talking about a completely different package, which is also one of the reasons why I think this is probably overblown. Mm-hmm. But at 30 days to expiration and looking at the political calendar before the Senate passes their own version of the bill and it gets sent back to the House, I don't think this is the right timing for directionally neutral for looking to be long deltas right now. So I cleared my ZB book. I think there's probably going to be more pain ahead, and then we're going to get a nice bounce. Because the reality ultimately is that the economy is heading in a direction that's going to bring down growth if we continue along this current path. And if you look at the specifics of this bill, it is, I'm going to be clever here quickly. There's Robin Hood, which is taking from the rich and giving to the poor. This is Hood Robin. This is an upward transfer of wealth. Even with the SALT, whose benefits from the SALT deduction changes? The wealthiest, right? More money in their pocket. They get to deduct more in places like New York, California, Illinois. So I'm just not comfortable being long deltas in bonds right now. I know that you have a little bit of a different feel. You're a little bit more comfortable. That could just be a function of positioning, sizing, time horizon. But my time horizon with 30 days to expiration, I'm not holding on to this anymore. I'm wrong. It's lost money. Move on.
For me, I don't see a reason to get off, only because, we talked about this a little bit in Futures Power Hour, we're at the low. So the risk reward, if you were to put on a new short right now, is terrible. So looking at a trade in isolation saying, would I sell some bonds right now? No. Now, if it broke this low, maybe, yeah. But it's right at support. And so the risk reward to selling them is terrible. So why would this be the place for me to get out of my long positions? Doing so would be to sell the bond right here at terrible risk reward. So obviously the trade is underwater. It's not underwater by a lot, and as ever, I'm using long duration risk-defined verticals, so it has a loss of less than 1% locked in to it. And so, okay, fine. Let's see. If it breaks this thing, I may just flip the whole thing over and end up short. But for now, I'm willing to let this ride out and see. That isn't because I'm terribly constructive. This is awful price action. It's not because I believe fervently that the bond is going to rally from here. It's just math, risk-reward math.
I hope you're right. If this is a freak out because of the House bill, this is not the bill that's going to be signed into law. The Senate has already said there's a number of things that have been put into the House bill that the votes aren't there. Right? So, well, again, overreaction short term, yes. My positioning offsides, didn't like my position sizing. But you can see the effect of rates spilling over into the equity market today, Mr. Radigan. Outside of GDX and GDXJ, the other 23 ETFs that we track here, of those 25, are all underwater, and a lot of it are the rate-sensitive names. You could see that KRE, the regional bank ETF here, That's down 3.56% today. It's firmly rejecting the downtrend off of the November 24, February 25, and now May 25 trend line. We very well could also be losing the uptrend from the June and March swing lows once more. It's a pretty ugly looking chart. We're back below the 1 month moving average. It's also some of the tariff names. XRT is down over 3% today. XRT, which likewise try to get back to the levels we were at prior to February 21st when we had that bad PMI report. Now failed there too. Dylan, is this the realization of everything Jamie Dimon said? I brought this up to you yesterday. Markets were too complacent. The bond market, it woke everyone up in today's session.
I mean, it's very, I don't think so. I think this is a little slap on the wrist. I would need to see more than one afternoon of anxiety about the U.S. bond market before I felt like there was any real validation outside of, thank God the bond market exists to correct some of the misguided actions of the U.S. government. But I think that I think that it is corrective, and I would need to see this last longer. Basically, I'm using stealing an Ilya line. Until this continues, I consider it an aberration.
And by the way, it certainly could be. I just don't think it's anything necessarily to do with the spending bill or this or that. I think those are all nice kind of adjacent talking points. But if this really is about, oh no, central banks can't cut, but growth is turning lower, and this is what's getting built into yields across the board, it's not going to be even in its application across markets. And to the extent, Chris, you're right that this is not going to be the bill that goes through the House. The markets might get kind of dribs and drabs of, well, if it was about that and that's resolved, then this is resolved. And so you get back and forth in markets as they kind of figure out, is it fixed? Is it not fixed? Was it about that? Was it not about that? So it'll be back and forth. But I think there's a larger issue here, a stagflation issue, not in terms of being here. It isn't here. That's obvious. But in terms of markets being worried that it's coming. And that speculative interest is enough. So my sense is that there's something larger under the surface here, and it's happening everywhere at the same time. And to the extent that the markets later jump on, oh, this is fixed, and that's not the spending bill, and we had a better auction, and blah, 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 we're going to get those things. And people will unclench because it's not about the downgrade, and it's not about one bill, and it's not about this or that. But the risk is they will misread that as a fixing of the issue, and the issue isn't that. It's bigger and broader.
Bigger, it's broader. Dylan, throughout all this, there was a brief moment today where we saw crypto prices spike again. BTC, that is a touch of a new all-time high. Very quiet this time around. Just from your sense, it feels like there's a different attitude in the crypto world. Post-election to January, it was a parade. It was all, balloons. It was a party. Feels like no one is out in the street celebrating this time around. Is that ultimately a good thing? Because the sentiment hasn't swelled?
That's I think it is a good thing, and it goes to my assertion that crypto is moving into more and more. I don't know about crypto. Bitcoin is moving more and more into a higher integrity, or a higher integrity, and ultimately, I think, lower volatility asset, which I think is honestly preposterous and a sign of the end of the world. But I do believe that it is what's happening.
Ilya, give us something positive about crypto. It's sitting.
I think Dylan is right. First and foremost, I think the introduction of ETFs in particular was a really big step in mainstreaming this stuff and getting volatility down and getting participation up. But I have no problem with crypto as that. I have no problem with crypto as another asset that people can buy and sell and make a market in. My problem with crypto is when the conversation goes to this will be the new currency, this will displace government-issued currency, this will be the new dominant ex-government way that payments are done globally. And the answer is just no, it won't. That's not going to happen. But as a tradable asset, sure, enjoy.
You know, I'm having trouble finding it right now. He tweeted it earlier, but he has his tweets set to auto-delete, which, you know, okay. Anyway, Mike Dudas, maybe someone remembers this. He's a crypto investor with Six Man Ventures. He co-founded The Block and Linksdow, the golf course. He pointed out what happened in terms of flows in crypto from the start of the year until now. And basically during the time period when Bitcoin was declining, January onwards, individual wallet holders were shedding Bitcoin and institution was accumulating. And institution has been accumulating while retail has basically been flat net over the past month. So we talk about institutional adoption. It feels like that also covers the world of ETFs. So if someone has their own individual Bitcoin and they decide, you know what, I don't want self-custody anymore, I'm going to sell out and I'm just going to buy IBIT moving forward instead, I suppose you would see the deduction in the individual wallet holding and the boost in the institutional. But even accounting for that, it's still more institutional inflow over the same time horizon if you wanted to net it out. And I think that's part of the reason why it's quieter this time around. It's that people weren't really leveraging up in April. They were nursing their wounds. And so there's a lot of chase going on in the market right now. Again, no cheerleading, right? There's no champagne being popped, Dylan, like there was back in January. I wouldn't be surprised if this thing runs for another 30 or 40K before, you know, people start gloating again, quite frankly. We should be prepared for that.
What do you mean by that? What do you mean before people start gloating again?
Before you have,
it could quietly go higher before it becomes sort of effervescent with its enthusiasm. Is that what you're getting at?
Yeah. Well, I mean, Ilya, you recall back in mid-April, I was saying that it looks like Bitcoin may be breaking out and it's quiet and no one's talking about it, right? Mm-hmm. We highlighted an IBIT trade, if you recall, a few weeks ago, for those that took it, you know, looking at a return, what a call spread would look like playing for a return to all-time highs now that we got back. We had cleared back above the former support at the end of April, just as a, you know, what do you do in a consolidation? You return into it, you move to the other side. Okay. But again, not being celebrated this time around. So it feels like people now, oh, we just set a new all-time high. Oh gosh, I haven't participated. I need to get in. You got to run here. But who's talking about this for the last 20 or 30K? I haven't heard a peep from the usual suspects.
No, not really. Not really.
Where are the TikTok?
You're right.
Where are the videos of Dave Portnoy talking about Bitcoin?
I haven't seen them. To your point, it is possible, certainly, that there is chase here, and I think you don't have to go very far to consider that this thing is priced in terms of dollars, and the dollar is selling off. So you have an inherent sort of tailwind here, just in terms of arithmetic. It's interesting the extent to which this might become a reflection of risk sentiment again. I don't think we've really crossed any red lines on ES and Q. We have on the Russell today, we talked about that range break on the Russell on Futures Power Hour, saying if it breaks with a 4-hour close, I'm short. It broke, I'm short. So if we get a bigger risk-off thing developing here, it'll be very interesting to see if these levels on Bitcoin hold or if it becomes a risk-on asset in a risk-off market once again.
Ilya,
kind of see the Aussie give up its gains, which isn't encouraging for this.
If it's a stagflationary environment in a world where we hold the belief true that Bitcoin is a safe haven.
Who holds that belief true?
It's just, I know you don't, but I know that there are people out there who do. Right?
He says.
You are a human, and amongst the human population, there are people who hold that belief true. So collectively, you are part of that. The technical here, take a walk with me. Swing low in August, high that you have in January, lows that you have right around the second week of April. That gives you a 100% Fibonacci extension at 135,300.
Completely a plausible thing. I mean, let's put aside the fact that I'm sort of constitutionally skeptical of this entire sector, and I'm not participating one way or another. In terms of the structure and the logic, I'm not going to argue with that. I'm not saying that I agree with it per se, because again, for me, just from an analytical perspective, I want to see how the winds of risk aversion land here ultimately. But does this make sense as an idea? Absolutely.
Dylan, let's talk more action. This feels like a fait accompli, only because it's a great expiration. Hopefully I don't expire on July 18th, because that means it's a clean 36 years, and then that's the end of the clock. So let's do the birthday expiration here, Dylan. On this Fibonacci extension is something like IBIT, which is a little bit more liquid than the Bitcoin futures here. That would give you an equivalent target of about 76. So playing for a long out-of-the-money call spread here with 58 days to expiration. You talk about doing something that's in the madman territory, long the 70, short the 80. This is a pretty decent trade. It's about a 5-to-1 right now, 22% probability of profit. I think that's a decent way to lever up if we're heading into a debt limit, debt ceiling debate, tax bill, fiscal nonsense cycle. I know it's been very quiet, and people may have their long-term holdings of Bitcoin, but as a trade, this looks like a prototypical flag right now that's getting ready to break out following a long period of congestion. Could I entice you into a madman trade that's long out of the money call options on the Bitcoin ETF?
Absolutely.
So I'm going to put this up in the Tasty Live follow account tomorrow. But again, IBIT here. Ilya, this is, forget the ticker for a second, my friend. If this was in, I have this over here for this bet. If this was in this textbook, okay, it finished, and we saw a breakout pull back to former resistance turn support and then a move up through the new swing highs. That is a textbook flag type of event. I mean, that is a buy.
That's a buy,
right?
That's
a
it.
buy. Okay.
I mean, it's a trend that's stair stepping.
Check the book.
I mean, listen. First, page 1. This is how support and resistance works. Oh, look, a break of resistance, a pullback to former support, and next leg higher.
And the next leg higher begins.
This is the classics.
It fits with what's happening in gold, I suppose to say, which our hesitation last week has been vindicated with holding on to what has been a very good trade over the past year plus for me, for you, Ilya. Dylan, I know that this isn't your cup of tea, so we're going to go to gold and talk in silver terms quickly, which is up another 1.53% today and starting to break out. But Ilya, gold up, Bitcoin up, dollar down, stocks down, bonds down. Maybe it's not sell America like it was in the first week or two of April, but it certainly has that stench.
It really does.
What's the catalyst
really
to stop this over the next 2 days? Or do we really need those PMIs?
I mean, let's kind of take a step back to what we were just saying, right? There's I think the big story, which will take some time to unfurl and for the data to start to show it, and the PMIs are a big piece of that. And that's are we going into stagflation risk territory? Which, by the way, if globalization reduces the cost of doing stuff just across the board because it reduces commercial friction along the supply chain, then deglobalization increases costs for exactly the same reasons. We just went through 40, 50 years of deepening globalization that came with structural disinflation and a structural decline in rates. We've obviously turned a corner. We've heard the Fed talking for a few years now about a higher neutral rate because inflation is going to be higher. Deglobalization is very much a part of this long-term mix. So are demographics. We're watching deglobalization happen at very accelerated speed since the beginning of this year. Is it any wonder that that is becoming a tailwind for inflation? Of course it is. That's exactly what you would expect. That's exactly what should be occurring by any stretch of the imagination. And it's now showing up in data around the world. That is being taken alongside the negative growth effects to mean that you're going to have a situation where central banks can't act, but need to because growth isn't good. So growth is allowed to get weaker. Rate cuts move out downwind for when there's a real emergency. That's the larger thing. The episodic thing is the bill in Washington, the situation in Japan where they're deciding how quickly they want to unwind their balance sheet, and that's why you're getting all this fuzz in those markets. The BOJ thought it would be a good idea to go ask market participants how fast they should go, and they got the results back. So they sort of made a news cycle out of it. And now there's a cliffhanger in June for the BOJ when they're going to actually make the call. So you get a lot of kind of episodic stories around the theme where it's tempting to assign what's going on to those things. And when those things are resolved, as they invariably will be, if only because the markets benchmark them, price them in, and move on, it'll be tempting to say the problem is fixed. And markets will probably show that. So you probably get a little bit of an unclenching in gold. It comes down a little bit. Bitcoin, maybe. Dollar anchors a little bit better. But will that mean anything is fixed? No. And so you could see some near-term back and forth here, is what I'm saying. The president is out there goading policymakers to pass this thing. Over the next several days, they'll pass something. They'll get close to passing something.
Something will get advanced to the Senate so they can just move on for a little while, but the Senate's going to send something back completely if you're watching what's on Thune or any of these Republicans who are, who just got elected. They are like, well, I'm not going to just throw the Medicaid and Social Security folks under the bus.
And they will pass a spending bill of some kind, right?
Something's going to get done.
It'll come back. They can
always do a continuing resolution.
Right, they'll argue about it some more, right? But it's not like this won't get resolved. It will, eventually. The real question is, does the issue that we're watching now then get resolved? And my suspicion is the answer is no. So the issue you're going to get some back and forth here, but I think the direction that we're seeing is right.
The issue being rising deficits and debts, right? Which, that to me is one of the...
Stagflation.
Great for gold, though.
Yes.
I would point out in the bottom pane here, IVR has been creeping up the past week or so. It bottoms here on May 13th. IVR hits a low of 40.9. It's now at 57.4, and during that same time horizon, gold has moved from about 32.40 up to 33.17. There was a little bit of a dip in there along the way, but rising vol with gold prices moving up. It's been one of the consistent things that has worked out over the past year and a half plus. Contemporaneous indicator if gold is going to be breaking out to the upside, as it does when it returns back into the channel, when it moves back above 32.65 or so. That's a sign that you want to see if you're going to be leaning long. Like I'm looking for a return to all-time highs. I'm leaning on my long call spreads in the tastylive account here to continue along the current path because nothing really has changed, right? Deflation.
I mean, I agree.
deflation would be an issue for gold, but that's not where we are. So Dylan, to loop you in now, we're up 1.5% today in silver. It's finally breaking out again, and silver volatility is popping up down here. Are we ready to get back in and, as you might say, corner the market?
Yeah.
Can I tempt you, Mr.
I think that for all the reasons that Ilya is referencing and you're referencing, especially with the expanded volatility, I think a put spread is a reasonable thing to do in silver.
Ilya, silver volatility really expanded over the course of the day today as this thing ran up. It was up around 1.3% or so when you and I met for Futures Power Hour, but IVRs were sitting right around 20.
Yeah.
And so it's now up 1.5%. It's challenging the highs that we saw from late April, and it's now at 37.8 IVR. I, for one, I'm looking to roll my call exposure that I have. It's going to expire worthless, right? So I'm just looking to reestablish my position here, because buying silver calls over the past year, again, plus has worked out. So sometimes it doesn't work. This time it didn't, thanks to early April. I don't see any reason not to press on. I know it's more growth sensitive than gold, but 35, 36 looks awfully juicy given the volatility environment where it's only just starting to rise.
For me, if you don't have exposure already, right? You're mentioning your rolling exposure that you want to extend. I don't have any silver exposure. I only have gold exposure. So from the perspective of somebody who does not have any stake or any skin in this particular market right now, I look at the swing high from April and go, you're at resistance. Break it. And then let's go. But from a risk-reward perspective, I don't think you have a reason to allocate an incremental dollar here today. I think this should be very high on your watch list, because all of the reasons that we're talking about here for this to go higher, they're all there. It's not like they've gone away. It's just you need the price action to validate. And we're almost there. Maybe another day.
Dylan, it's never a good day when gold miners are the only groups leading to the upside. This looks like a pretty classic kind of flag or pennant. Ilya, Dylan, what's the view from Europe on all this? I know I asked that time and again, but I do think it's interesting because you're well connected into the various, I wouldn't say political elite there, but you are a well-established business person with his hands in many different cookie jars across the continent. So you don't have the typical industry perspective.
I think this is where Sosnoff is correct, where under the unspoken organizing principle of Europe and China, for sure, but for sure Europe, the unspoken organizing principle of Europe is develop strength away from England because of Brexit. So the thing is, Europe had the benefit of Brexit. And because Brexit was so shocking and alienating in the relationships, the business relationships, I mean, where all of the German money or all the French money or all the Italian money, all the continental European capital that historically had been managed and handled out of London, because that was where the greatest expertise in dealing with money has resided in this part of the world. And so when England passed a law saying that that was no longer desirable implicitly by virtue of their laws with passports and difficulty getting in and out of the country, and you got it, all the immigration barriers that were stood up, Europe began the process of migrating into itself or within itself and out to the world, but obviously still hugely integrated with the United States. Now you have the United States at least threatening. I mean, we'll see how this actually plays out. I'm still kind of skeptical of how much will really happen. But I would say, to answer your question, the internal dialogue in Europe is self-organize as much as possible and create as many multilateral trade relationships away from America, whether it's with Canada or Mexico or China or whoever, as much as possible. But don't talk about it a lot, because there's no reason to invite more hostility from the very powerful American economy and policy making body, and I think there's a sadness in it. I know there's a sadness in it, not just among the European business community. So no one in Europe sees the American sovereign credit get downgraded, however meaningless that may be, or no one in Europe sees the lousy bond auction today and feels anything but sadness and concern. There's nothing good for the rest of the world for America to degrade itself. And so it's like watching your older brother create a series of self-inflicted injuries when really you want your older brother to be as strong and as healthy as possible, because the stronger America is, the stronger Europe is, for sure. And so Europe is, on the one hand, forced into an increasingly non-U.S. organizing principle on the margins. I mean, it's not consequential yet, but it could be in the future on the margins, and then looks at what's happening with the sort of confidence in the American credit on a day like today with concern and disappointment and anxiety.
There's something about the downgrade. I know we don't think it matters, Ilya. This may be one of the reasons why it doesn't matter. This comes from S&P Global IQ. It's the market implied probability, or rather the market implied credit rating, if you look at how actual financial instruments are trading, using credit default swaps as the input here. It gives you a perceived credit score equivalent. So the actual ratings for Moody's, S&P, Fitch, AA+. But if you look at how the market has actually been treating U.S. credit, and you look at the swap spreads, it's been treating it as below that rating for a while now, since the start of 2023. It's been treating it barely investment grade for the past few weeks. Perhaps one of the reasons why the downgrade didn't really matter is because we collectively as the market have already priced in the credit, to a large degree, the fiscal situation here, the spending path, at least that credit markets have.
I mean, it's certainly possible, and, take CDS pricing with a grain of salt after those
highly illiquid markets, yes.
Yes, and of course, ISDA is an interesting institution. You might recall lots of interesting conversations around what is a CDS trigger when especially we start talking about the sovereign situation in Greece and whether they... I
feel my blood pressure rising.
Whether they count as a default or not.
Is it a technical default, Ilya?
Yeah. What kind of default is it? It's the inconvenient kind that threatens the architecture of the Eurozone. Right. We can't call that one. Shh. Don't anybody say anything else. So the market here is a little woolly, but it does speak, I think, to the larger idea. The U.S. is the U.S. There is no supply of risk-free asset benchmark to take over if the treasury market fails. There is no currency of commerce to take over if the dollar fails. That doesn't mean that the market can't go, I want to be compensated for U.S. credit risk because these guys are out there running a difficult game, and what this will mean is it will be a lot of shorter-term volatility, so pay me for that risk, right? We've talked about term premium has been rising this year in treasuries. That isn't because anybody thinks that the U.S. is at risk of default. So you look at CDS doing what it's doing, and it's an illiquid version of basically seeing the same thing. It's an incremental change where the markets go, you know what, you need to pay me for this extra risk. That isn't the market saying the U.S. is in fact a below investment grade borrower, because in reality the U.S. can go and borrow all the money that it needs at any second. The question is, are the markets telling you that they don't like this and that they want to be paid because the short-term uncertainty is uncomfortable? I mean, that much I think is clearly there.
Dylan, I know most people when they engage with the
I just
bond,
want to add to what Ilya's saying, which is why,
Sure, yeah.
because for the very reasons that he just outlined, the lack of alternatives, that whole list we all three of us know. That's why I actually am not that concerned by today's bond auction. I look at it as a wrist slap.
Sure. Yeah.
Not as a some sort of canary in the coal mine for a soon to implode marketplace.
Yeah, it's not like we're going to see a failed auction around the corner, right? Like, or foreigners stop showing up. I think that was demonstrated.
We might see more of an incentive to wind down the tariff madness sooner than later.
Wouldn't that be a joyful outcome of
that? Would be very, very interesting, let's say, to see the tariff go back to, you know what, never mind, 2%.
We could just do
they won't say never mind. They'll say, we did the best deal in the history of deals.
Yeah.
Everybody conceded to what we wanted, and so now we're going to take the number down. I mean, no matter what, they're going to claim a mega victory in the best deal in history.
Sure.
No matter whether it's 100% tariff or a 2% tariff, it'll be the greatest deal in the history of all deals. And
that's the one thing that
and a victory.
Yeah, I mean, I think you're absolutely right. That's the one thing
by default.
That's the one thing that stands out here, is that the president is a serial killer of sacred cows, including those he raised himself. Absolutely. Like for example, the USMCA. It was the greatest thing until it was the worst thing, and never mind that it's his thing. So when you look at this 10% floor on tariffs, they said this is the new floor, but so just because they said it doesn't mean they're going to stick by it. They have no issue unpicking their own stuff. So I suppose it's not impossible if the pain gets acute enough, and I don't think it has, which tells us we need more pain. But if the pain gets acute enough and the put is in fact back in stocks, well, that just makes stocks more vulnerable. Because then the vector for market discipline is not the bond. One of the interesting things here is if the bond is selling off and the administration is sitting there quietly, market goes, wait, I thought you told us this is how you motivate action. It's not. All right, let's go sell stocks. Maybe that'll motivate action. If the put is back in SPY out of TLT, it's a reason for stocks to go down, not up. Because the market discipline mechanism then needs to shift. And maybe that's what we're starting to see. But we need that market discipline, and if we do, if we get it, if we see it, if the red on the screen is annoying enough, then yeah, I don't see why they couldn't go, you know what, never mind on this whole 10% tariff thing. We'll call it 5, no 2, no 1. Wait, we're below where we were. Victory.
Victory. I see TLT as the problem here because it's the way that most traders that don't trade professionally or for a living engage with this. And what I mean by that, I mean your retail mom and pop investors. People have access to the bond market in their portfolio on a day-to-day basis. It's probably going to be something like a TLT, a SHI. It's going to be one of these treasury ETFs.
Yeah.
TLT is closing at a low here right now, which is unfortunate. It just creates a scenario.
All of my trades except TLT worked today. Even the awful max loss SPY and QQQ verticals saw some gains today and came off their extremes.
Now they're just 97%.
Obviously, there's a little
bit of 100
bleeding for them to do be back to break even. So let's go. Let's keep this going. But everything I have on except TLT made money today.
Well, it was gold for me today. I mean, if there's a line in the sand here, let's see if we can cross 58.40 or so. The high from March 25th in ES is 58.37 1/4. So if you drop below there, you probably then start to aim for a gap fill that you have for May 9th, which, Elliot, a follow-up on the conversation from earlier in today's session on Futures Power Hour when the market was sitting closer to 2075 or so. A gap fill for May 9th comes in at 2033.10, and we're now at 2050. So you can kind of see a scenario. There's also a scenario here where yields keep moving and stocks keep selling off overnight, and then something happens, gaps are filled, yields back off, equity markets continue their drumbeat higher, and something occurs that gets us back in line. Because again, we are in the territory where Trump himself said bond traders were getting kind of yippy. We're through those thresholds. We're past yippy now. So what comes next? Where's Scott Bessent? Where are you? This shouldn't be happening. I haven't heard Lutnick or Navarro or Ron Vara, for that matter, speaking in public recently. But Bessent, he hasn't said much of anything at all. Dylan, we only have a few minutes left here today, so perhaps dare we have some fun at the boss's expense? Overtime handoff was called off today. That doesn't happen that often. But when it does, it's typically because the market's in a state of drawdown. Now, accounting for all the times that you and I have been bumped for personnel, like I'm not able to be there, or you're going to be running late, you'll be there at 4 p.m., so the handoff is canceled, right? We're just canceling purely for market conditions. That's happened 7 times in 2025, right? Tom and Tony say that it's not a good day for a handoff. You know what the average return of the S&P 500 is if you hold it for a week after the overtime handoff is canceled, Mr. Radigan?
I can speculate as to what the answer might be, only because of the pretext upon which you have presented the question.
What is the
question is, what's better, CNBC Marketing Crisis Special or overtime handoff canceled? We know that the market is up either way based on the way you presented the question. So the only question, or let's say economists cover, end of the world economists cover, CNBC special report marketing crisis, or Tom and Tony taking calls, overtime handoff canceled. Which one has the best returns after it happens?
Well, we don't have enough data to say a year out from overtime handoff being canceled, but we do have enough to make ventures into the 1 week and 1 month returns. I will say,
we can always get wildly speculative.
In the very small sample size that I have in front of me, I can tell you that when overtime handoffs are canceled in 2025 for market reasons, the 1 week return for the S&P 500 is plus 2.25%.
So we buy them at the open. Buy them at the open.
Oh yeah, maybe that's the pretense for Bitcoin going up to 135,000, right?
That's what we need. Which, by the way, the cover of this week's Economist. Let me see if I can.
Wait.
You see that? There we go. Crypto and its swampiness, as per the adjacency to power now in the U.S.
Why it won't end well? It's going to end great. It's going to end great.
I hate to
We're going to rally through these highs, baby.
There is no end. Come on.
Dylan, if you're the crypto czar, what's the most controversial thing that you do?
Ban crypto.
Ban crypto.
I like it.
And with that, overtime is out of time.
Yeah. I think we're going to get my crypto czar. Dylan Radigan
2 days in a row, baby.
We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, maybe earlier unless overtime handoff is canceled again. For Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. We'll see everyone again soon. Ilya Spivak's up next with Macro Money. I'm back later with Victor Jones with The Price of Truth. Hopefully see everyone there.
See you there. Inflation is coming back, and it is returning at the worst possible time when economic growth is going in the opposite direction. Markets are starting to get unmoored. We're about to get economic data that's perhaps going to make the situation look worse still. On that happy note, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to delve into a bit of a conversation about what is perhaps the scariest thing for markets and policy makers alike. And that is stagflation. There's a situation where growth and inflation are moving in opposite directions, whereby growth is weak, but inflation is rising. This is, of course, a terrible mix of things to happen, because from a central bank's perspective, it's difficult to say whether you should cut rates or raise them. From the perspective of government officials, it's very difficult to provide some sort of backstop to the economy, even through the regular channels of unemployment benefits and such, because that just fuels inflation. And so the prospect is a scary one, and one that everybody is very eager to avoid. We've heard worries about it emerge in recent days from Fed Chair Jerome Powell, from JP Morgan CEO Jamie Dimon. It's beginning to appear more and more, and although this is a bit of a unicorn of a scenario, it is very, very rare that it actually occurs. The evidence seems to be piling up, and we start with a look at the news that came through overnight. It comes from the UK, where we get a significant jump in inflation. Now, we were expecting to see a meaningful increase, but it turned out to be even larger than expected. The markets were looking, in fact, anticipating that some structural factors in the UK for this month, namely a rise in utility costs, mandated utility costs as of April 1st, as well as a new excise tax on electric vehicles, that would be inflationary, that the cost for water and energy and other kind of utility inputs would rise, and that transport costs would rise, and that this would be inflationary, up from a rate of 2.6% in March to 3.3% in April. We ended up with 3.5%. Moreover, core inflation jumped to 3.8%, also higher than expected. And the retail price index, which is a favored gauge for the Bank of England, it jumped from 3.2 to 4.5 versus 4.2 expected. So significantly higher inflation readings across the board. We can see the reference points for this is somewhere in the beginning of 2024. So these are 13 and 15 and 12-month highs on these measures. Now, this follows in a sequence. We've seen higher inflation numbers out of a whole host of major economies this week. The revised set of European, that is Eurozone numbers, significantly higher, 2.7%, a sharp rise, the highest in 3 months. The core rate in Canada surging unexpectedly to 3.1%. That again has a reference point in early 2024, so a major high there. And we can see how the markets have read the results. So while in the UK the issue was fuzz around, again, what you could shrug off as one-off factors, like an increase in excise tax or an increase in the price cap on energy by the energy regulator. Similarly, you could do the same thing in Canada and say, oh, well, this weirdness in the inflation numbers has to do with an expiring carbon tax, and this will all even out. All of those ideas may be well and good, but the markets are telling you very clearly how they're interpreting these numbers. Front-end interest rates are up for both the UK and for Canada in the wake of each of their inflation reports, which tells you that what you are seeing is the markets downgrade rate cut expectations in the wake of this data. So very clearly, rates higher, and the expectation that central banks will have to be slower in any reaction function that they have to any kind of a growth scare as a consequence of the inflation numbers that we've just seen. The story in the U.S. is a bit fuzzier, as we've mentioned. The way the CPI numbers were kind of encouragingly normal at first sight. Most critically, of course, no big surge in goods inflation, something that was a legitimate scare given all of the tariff back and forth. But that seems to now be a mirage, because when we later got the PPI version of the data, as we've discussed here before, we saw this shock decline in month-on-month PPI. And that's even as goods inflation increased and was some of the fastest that we'd seen since early 2023. So the goods inflation seemingly is in fact arriving. The cost of the tariffs is in fact appearing. But then service costs, we can see this is that big decline right here, suggest that businesses are eating that increase. They're not passing it on to consumers, and they're taking the hit in margins instead. In fact, a 1.6% month-on-month hit to margins, which is quite a thing. That's a lot for a single month. And what you see here then is why it doesn't show up here yet. Businesses are just absorbing it. They're not letting it get to consumers. But the inflation is indeed there. And for what it's worth, we have, of course, seen a moderation in Fed rate cut expectations, where we see that having expected many more rate cuts at the sort of peak panic in April, we've now unclenched, and we're sitting now even a little bit to the hawkish side of the Fed's own outlook. The markets now see 46 basis points this year, 47 rather next year. That's almost exactly what the Fed is saying, 50 and 50. What's interesting, perhaps, is that the cumulative number of rate cuts over the past several days in particular has started to increase, but not because of what might happen this year. So again, central bank action seems to be hemmed in, and rate cuts are starting to push into the further year. They're starting to go into 2026. Now, you don't quite see it in U.S. yields today. They're significantly higher at the long end of the curve, perhaps around all of what this means as an initial proposition. But you are starting to see that the markets are angling preliminarily here to say there is inflation on the march. Central banks are in no position to act now, but they are going to have to act eventually, and perhaps with some degree of catch-up. This is where the second piece of this puzzle comes in, the growth part. So we got the deflation in stagflation. Here comes the stag. Here is the expectation set for the PMI numbers from S&P Global that are due to come out here over the next 24 hours or so. And we're going to get updates for Australia, Japan, the Eurozone, the UK, and then, of course, the US. And perhaps the most worrying part of this, besides the fact that most of these things are expected to go in the wrong direction. A slowdown in the composite reading for Australia. And of course, just to remind everybody, this is as ever around a center line of 50, where 50 is neutral. Above 50 is growth. Below 50 is contraction. The higher you go above 50, the faster the growth. The lower you go below 50, the faster the contraction. And so here, for example, for Australia's composite PMI here, which takes in both manufacturing and services, scaled for their contribution to the economy. We see here 50.7 from 50.1 would imply that there is growth, but it has slowed. In Japan, same thing, still growth, but near standstill levels, barely a hair above 50. Same story in the Eurozone, although here we're hugging standstill for a second consecutive month. In the UK, expecting a move from contraction to essentially standstill, so not exactly the most encouraging story there. And in the US, standstill and at a slightly weaker setting. So the two that really stand out here are the US, of course, and the Eurozone. And the reason why these two in particular are in focus is because, of course, these are two of the world's top